Good morning, good afternoon, or good night, wherever you are. On behalf of the Firoz Laoji Institute for Africa, I would like to welcome you to the inaugural China-Africa Conference. The Firoz Laoji Institute for Africa at the London School of Economics and Political Science focuses on the study of and engagement with Africa. The FLIA promotes the visibility of Africa in the LSE's teaching, research, and policy engagement. It supports independent, multidisciplinary academic research and teaching, open and issue-orientated debate, and evidence-based policymaking. In recognition of the long-standing and increasingly important relationship between China and Africa, the FLIA established the China-Africa Initiative. The China-Africa Initiative will actively contribute to student-led programs and FLIA's ongoing program for African leadership, while aiming to encompass multi-stakeholder perspectives and engage multidisciplinary discourses in the social sciences and arts and humanities. In addition to regular publications on the Institute's website and public platforms, the initiative will demonstrate a commitment to broaden China-Africa's research projects, working with the departments at LSE and globally. We're honored today to be joined by a very distinguished group of guests, and I hope you will join me in giving them a warm welcome. Now, it's my pleasure to hand over to Professor Shirley Yu for the opening session, Unlocking Africa's Economic Potential, Innovation and Sustainability. Thank you. Good morning, good afternoon, or good night, wherever you are. On behalf of the Firoz Laoji Institute for Africa, I would like to welcome you to the inaugural China-Africa Conference. The Firoz Laoji Institute for Africa at the London School of Economics and Political Science focuses on the study of and engagement with Africa. The FLIA promotes the visibility of Africa in the LSE's teaching, research, and policy engagement. It supports independent, multidisciplinary academic research and teaching, open and issue-orientated debate, and evidence-based policymaking. In recognition of the long-standing and increasingly important relationship between China and Africa, the FLIA established the China-Africa Initiative. The China-Africa Initiative will actively contribute to student-led programs and FLIA's ongoing program for African leadership, while aiming to encompass multi-stakeholder perspectives and engage multidisciplinary discourses in the social sciences and arts and humanities. In addition to regular publications on the Institute's website and public platforms, the initiative will demonstrate a commitment to broaden China-Africa's research projects, working with the departments at LSE and globally. We're honored today to be joined by a very distinguished group of guests, and I hope you will join me in giving them a warm welcome. Now, it's my pleasure to hand over to Professor Shirley Yu for the opening session, Unlocking Africa's Economic Potential, Innovation and Sustainability. Thank you.
Greetings, everyone. Thank you for joining us today at the China-Africa Conference at the LSE 2021 that's brought to you by the China-Africa Initiative at the Firoz Laoji Institute for Africa. My name is Shirley Yu. Along with me are my LSE colleagues all day at the conference today. The world is sitting at an inflection point. We continue to see deeper levels of engagement across the developing world. We witness the rapid transformation brought by digital technologies. We begin to see increased consciousness in sustainable development. We see the rise of more regional integration, perhaps most visibly with the combination of the AFCFTA and the regional trade agenda. We see more need for global collaboration today more than ever on health, on infrastructure, and on education. We have planned an insightful day on China and Africa today ahead of us. First of all, allow me to introduce Professor Tim Allen, Director of the Firoz Laoji Institute for Africa at the LSE, with a special message for the conference.
Good morning, good afternoon, or good night, wherever you are. On behalf of the Firoz Laoji Institute for Africa, I would like to welcome you to the inaugural China-Africa Conference. The Firoz Laoji Institute for Africa at the London School of Economics and Political Science focuses on the study of and engagement with Africa. The FLIA promotes the visibility of Africa in the LSE's teaching, research, and policy engagement. It supports independent, multidisciplinary academic research and teaching, open and issue-orientated debate, and evidence-based policymaking. In recognition of the long-standing and increasingly important relationship between China and Africa, the FLIA established the China-Africa Initiative. The China-Africa Initiative will actively contribute to student-led programs and FLIA's ongoing program for African leadership, while aiming to encompass multi-stakeholder perspectives and engage multidisciplinary discourses in the social sciences and arts and humanities. In addition to regular publications on the Institute's website and public platforms, the initiative will demonstrate a commitment to broaden China-Africa's research projects, working with the departments at LSE and globally. We're honored today to be joined by a very distinguished group of guests, and I hope you will join me in giving them a warm welcome. Now, it's my pleasure to hand over to Professor Shirley Yu for the opening session, Unlocking Africa's Economic Potential, Innovation, and Sustainability. Thank you.
We start to see more guests joining us on social media platforms. Before we get started formally, we have a whole day of program rolling out, and we would love to have as many engagements from our audience all over the world as possible. So please do send in your comments, your questions to our speakers. We have all our programs lined up on our website, www.china-africa.uk, as well as all our LSE's official social media portal and websites. So please do check out to find out your favorite speakers and join us at that particular time. But please do send in questions so that we can have the opportunity to ask our distinguished guests on your behalf. So we look forward to your engagement. And now, first of all, please allow me to welcome Professor Kevin Yorama, Senior Director of the African Development Institute at the African Development Bank, who will be delivering a special message on behalf of the President of the African Development Bank, Dr. Akinwumi Adesina. And so Dr. Yorama has been extremely busy lately. And at the last minute, he's kindly agreed to join us, particularly this morning, to kick off the session for China-Africa 2021. So thank you so much, Professor Kevin Yorama.
Thank you very much. There seems to be background noise somewhere. Are you hearing me? Okay, then it has stopped. Hello? Hello? I think we are having a technological issue. I'm not hearing you anymore.
Please go ahead, Professor Urama. You are on live.
Okay. So you're hearing me now? Okay, thank you very much. Good morning, everyone. Good afternoon or good night, whichever part of the world you are joining the conference from. I bring you greetings from Dr. Akinwumi Adesina, the president of the African Development Bank Group, who is not able to deliver this opening speech in person due to other pressing engagements. On his behalf, I would like to thank the Institute and LSE for inviting the bank to deliver this opening speech at this inaugural China-Africa conference. The theme of the conference and the topic you have requested me to speak on, which is leading the 22nd century, Africa's future and China's role in it, is indeed very exciting. As noted by in the event website, China has really become Africa's largest investor, biggest trading partner, preeminent digital service provider, and increasingly a soft power influencer. It is therefore very clear that China's role in Africa and Africa's future will be both complex and also enduring. And I would also like to add that Africa's role in the global effort to achieve inclusive and sustainable development is more crucial now than ever before. So this conference could not have come at a better time, especially as the recent pandemic, the COVID-19 pandemic, has impacted global economies, including Africa's and China's economies, in several ways. And while the impacts of this pandemic on global health systems, on global economies and societies, and are all very significant, it has also triggered fundamental discussions and rethinking on the current global systems of development cooperation. The pandemic has sufficiently, you would agree with me, demonstrated the long-standing inequities in the global development paradigms and the political economy of development cooperation in very fundamental ways. It is from this perspective that I'm going to discuss briefly what I see as the role of Africa in the 22nd century and the role of China in it. Let me just provide a bird's eye view on Africa's economy before and present, then the future, the Chinese economy before, present, then the future, and then how the two may work together in the 22nd century to lead inclusive growth and sustainable development, which I'm very passionate about. Africa is a continent with 54 countries, very different countries, and 1.3 billion people. This constitutes about 16% of the total world population. It is projected that in the next 30 years, more than half of the world's population increase will be in Africa. And by 2100, 80% of the world's population will be in Africa and Asia. The continent is also very richly endowed in both human capital and natural capital, with a very youthful population that provides teeming population of youths that can feed the labor market of the future, including in the 22nd century. Specifically, about 60% of Africa's population are youth below the age of 25. 41% are below the age of 15 years, compared to 28% in Central America and 24% in Asia and South America. You will agree with me that the role of Africa in the labor market of the future can therefore not be gainsaid. With regard to natural resources that fits development in all industrial revolutions, Africa is also at the forefront. According to the US Geological Survey published in 2020, Africa hosts 30% of the world's mineral resources and accounts for more than 20% of global annual production of 5 key minerals. Name it: platinum 80%, cobalt 77%, manganese 51%, 46% of diamonds, 39% of chromium, and 22% of gold. With this rich endowment in natural capital and also human capital, and as well as other forms of capital that feed economic growth and development, Africa will remain the treasure trove of the world for years to come, including in the 22nd century. In addition, as we have seen in this current century, Africa offers high rates of return on investments. In many ways, one could therefore say that Africa is the next growth pole of the world come the 22nd century. But if we look at how Africa has fared, given all these resources, we would see that Africa needs to do more in order to harness these resources to go further. But Africa's economies have been very resilient, though different and heterogeneous, depending on regions and countries and the stages of development in which they are. On average, we've seen about 4.6% growth rates between 2000 and 2016. That was after the last 2 decades, where growth between 1980s and 90s, where the growth rates were hovering around 2%. Now, even after the pandemic, we're seeing that Africa's economies are rebounding. Despite 2.1% contraction in 2020 due to the effects of the pandemic, we are predicting that Africa's economy will rebound to 3.4% growth rates in 2021 and also 4.6% in 2022, respectively. So you would agree with me that given this resilience, Africa's economy presents huge opportunities for the world and for China, both in the current and in the 22nd century. But to harness these opportunities, a number of things still needs to be done. There is continued need for improvements in several economic fundamentals in Africa: managing inflation rates, fiscal deficits as percentage of GDP growth, total external debt as a percentage of GDP is also rising, and so are the associated debt service to revenue ratios. All these are trending the wrong direction. Africa also has not been seen an inclusive growth, and this is something we could perhaps learn a little bit from China and other countries that have really achieved high rates of growth and spread that growth across populations through poverty alleviation programs. In terms of participation in the global economy, Africa is also not doing very well. Africa accounts for the least share in world trade, foreign direct investments, and share of global output compared to most other regions. Trade deficits are also widening, especially in its trade with China. On the other hand, intra-Africa trade still remains small, below 16% as at 2020. All these fundamentals need to be carefully looked into with clear policies to turn them around for Africa to lead the 22nd century and expand opportunities for China and the rest of Africa's partners in order to be able to achieve the sustainable development goals that we also care about. Now, let me look briefly at China and why it matters for Africa to deepen the relationship it already has with Africa and with China, and also for the rest of the world to do the same. In fact, you would agree with me that the pace, the depth, the scope, and ramifications of China's economic transformation since 1979 are indeed unique in economic history. It provides a number of lessons for Africa and other developing economies. From a very low base, China has grown its economy to become the second largest economy in the world, constituting about 17% of the world GDP at current market prices in 2020, coming second only after the United States. In fact, when we look at the purchasing power parity perspective, China is the #1 contributor to the world's GDP. And this is phenomenal, considering that only few decades past, China was in the place where Africa and most other developing countries are now, i.e. developing countries called third world countries. China has also lifted millions out of poverty through concerted and consistent structural policies that we can learn from as Africa to be able to lead the 22nd century. This begs the question, what can Africa do differently? And this is where I think this conference and my speech would like to focus on. What I would like to learn, we would like to learn from China and what China can learn from Africa and the rest of the world, so that together we can build a more sustainable and prosperous world, more resilient economies that can absorb similar shocks that keeps coming as headwinds that beset economies, like what we've just seen in COVID-19. Let me look at briefly the structure of China's economic policies that, in my view, made this happen. I'm not an expert in China's economic policies, but I'm just, as a layperson, looking from afar what is going on and what could have made this possible. First, the economic development strategy in China, in my perspective, focused on export-led growth based on the country's comparative advantages in labor-intensive industries at the beginning, and progressively increased into manufactured products and machineries and high technology products as the economies grew. Second, close attention was paid to China's economic and evolving endowments in terms of the structure of its economy and its comparative advantages in all sectors. Again, to harness this, they carefully designed industrial policies, upgrading them as their economy grew from one stage to the other. So if I look at this, I just have a very simple recommendation that I see coming out of how Africa can lead the 22nd century and learning from China and the role of China in it. One, China is an example that it is possible to transform economies within a generation. If China can do it, Africa can do it. For Africa to lead the 22nd century, therefore, the simple policy stance of having an organically evolving development policies and strategies owned by the people, designed by the people, and gradually upscaled as the development progress happens, will still apply to Africa. These seem to be the same policies that many other economies that have gone from agrarian low-income economies to high-income economies, including South Korea and Singapore and others, did. Africa's will not be different. What do we then expect China what role do we expect China to play for Africa or in Africa as Africa grows to lead this 22nd century that we're talking about? First, a trade partner. As of 2018, China's economy was larger than the entire Eurozone, 2.5 times larger than Japan, 5 times larger than India's, and the list goes on. And because of this enlargement in its GDP growth and economic activities, China has become a global demand and import market for trading partners. Africa needs to scale up and have a share in it. This is particularly important for Africa because currently over 90% of China's exports to Africa are high-end manufactured and technology knowledge-driven goods, products. Therefore, the returns to technology goes to China. On the other side, Africa's exports to China are primary products, low-end, low-priced primary products. So we need to see how to reverse this trade imbalance going forward to harness more the role of China as a big market that Africa can take opportunities for. And the ACFTA that Africa has launched can be an opportunity for us to do that. I can see my time is running out. So in the next 2 minutes, let me just summarize some of the other few key points. Second, China is a great financier for Africa, and we have seen that happen tremendously over the decade, and this should continue in the 22nd century. Finally, for lack of time, I cannot list all the things that I've thought about in this regard, but let's focus on those two: targeted policies, trade partnerships, and finance. If we can harness this more and more, Africa will benefit more and more from the historic relationships that has existed between Africa and China, especially also including technology transfer and knowledge sharing. There is no binary choice here. Even though Africa is trading more and more with China, it has not reduced its appetite for trading with other regions. So it's not choosing China, United States, or the Euro area. Africa needs all its partners to fill all the huge financing gaps, both in infrastructure and knowledge, technology development, capacity development, and all the other things you can name it, to position Africa to rule, to lead the 22nd century. And finally, it is in the interest of the global community to build inclusive and sustainable development in Africa, because without this, the global sustainable development goals will not be achieved. Apologies for running over by 1 minute. Thank you so much.
Which we will be discussing in greater depth throughout the day, but also in the years to come. And those are really, really important messages from the indigenous leadership on from the African continent. So now joining Professor Urama as we kick off Unlock Africa's Economic Potential, Innovation and Sustainability, we have two global leading thinkers on the horizon. One, if I may introduce Philip Siegel is the senior director of first of all, senior director for Africa for the Thunderbird School for Global Management. But also, Philip is the senior advisor on data innovation and open government for the Office of the Deputy President of Kenya. And we are very fortunate also in today's conference going to welcome the Deputy Chief of Staff for the President of Kenya, Her Excellency Ruth Kadia as well. So we so much appreciate the support from Philip and also from the Kenyan government. And also joining us is Mr. Blake Gold, CEO of RFI Foundation. Blake has been doing tremendous amount of work, particularly on sustainable finance, not only throughout the Islamic world, but also Blake is going to tell us his visions about global sustainability. And so today, let's kick off from a couple of points that we have heard from Professor Urama's speech there. We start to see that Africa is bypassing the 20th century global industrial growth model, including the model that China has adopted. And Africa is today moving straight into the digital economy era. So what are some of the fundamental factors that are supporting Africa's digital transformation in such a massive way today? Any gentleman,
Thank you so much. No problem. I think, yeah, and not to try to repeat. And thank you so much, Ali and LSE, for inviting us into this discussion. I think as we see, and the questions are right, how is Africa doing this? I see a couple of things. First of all, I think Africa is a continent of a lot of problems. And for those who know that, then that builds a resilient culture of innovation. So our innovations are not vanity innovations. Our innovations are are built around responding to problems. The second piece, I think, Professor has just mentioned in terms of our demography. Our median age is 19.1. We're the youngest continent and the youngest people in the world, and basically digital natives. There's a generation here that we know that is mobile only. The other third piece, of course, is simply the entrepreneurial spirit, I think, of Africans, to the extent that we know how to manage, because in most cases we have a population that has a burden of history, and that is tied to exclusion, and therefore over time we've been able to leapfrog, and we call ourselves leapfrog capital of the world. The fourth piece, I think, is leadership and governance, and we've seen over time, despite the recent 2 or 3 weeks of coups that we've been seeing, we kind of have had a very robust African governance architecture led by member states from the African Union, to the extent that systems of governance now are very strong. We have a very strong open governance culture, and then Prof has alluded to this co-creational element of government, and therefore understanding that the business of governance or government is not left to government alone. It is actually for everybody to co-create government, for government to be resilient. So those, for me, are the larger brushstrokes of why we see Africa, and I dare say leading in the fourth industrial revolution, of course, leading from the front. Previously, we've been leading from behind on the other three, whether it's steam, electricity, or ICT. But I think in the fourth industrial revolution, we are seeing that Africa is actually leading. Thank you.
So we are actually ambitiously looking at leapfrogging in the fourth wave of global industrial revolution. That is indeed very ambitious. But Professor Urama, earlier in your speech, you mentioned that if China can leapfrog in the previous 2 waves, essentially, of the industrial revolution in 1 generation, or let's say, even if in 2 generations, that Africa certainly can do it. Can Africa do it? How confident are you in delivering that leapfrogging effect in, say, for example, the next 4 years or so?
Yeah, thank you very much. As my colleague, co-panelists have already mentioned, when I look at Africa, the landscape, I'm filled with optimism. And that optimism is the fact that we have seen good governance, good macroeconomic policies that are being implemented, and a uniting Africa. And I use the word uniting Africa in the sense that Africa's, under the leadership of the African Union, Africa is coming together to create transformative policies. We have the ACFTA we have talked about, we have the Open Visa Index, that several policies in agriculture, in energy, and when you see what happened, even in COVID-19, you can see the level and scale to which Africa's governance has improved. That is key, because leadership is everything. And second, my optimism also stems from my work when I was working in Kenya in an African technology policy studies. We had launched an innovation challenge program, and I was blown over by the kinds of innovative and creativity that you see amongst Africa's youths and women. And given that this is about 60% of Africa's population, I can only be so optimistic that Africa can and is doing it. Not can do it, but is already doing it. We have the M-Pesa technology, we have the M-Pedigree technology, we have several technologies that is coming out of Africa and transforming the world. Now, the point that I'll make here is what Philip has made. We were lost out in the first, second, and third industrial revolutions. And in the fourth industrial revolution, Africa is really shaping it, because the youths are the most innovative, and we have the largest population of youths. So we have what it takes in order to do that. And then also, as in one of my publications on how social innovations is driving transformative change in Africa, in Stanford Innovation Review, it was very clear to me that we have all the rudiments that is required in national innovation systems in most countries in Africa. Kenya, Rwanda, Nigeria, South Africa. We have several hubs where innovation is now thriving and is being prioritized by leadership. So I really see an Africa that leads the future in terms of taking over leading the fourth industrial revolution. So yes, Africa can, and Africa is already doing it.
So, well, Philip, I see you smiling there. So obviously you agree with Professor Yorama. However, I tend to think it's a fantastic idea to think about the idea of unifying Africa. We have the African Union, but also now we have the combination of the AFCFTA. Very, very exciting on the horizon. But on the other hand, Africa is composed of 55 countries on the continent, and they are not. They have different languages. They have each country has their own borders, and so there are different sets of rules, legal systems. And so I understand in the digital economy, say for example, 75% of the cost of e-commerce today is attributable to logistics cost. So Africa obviously is not integrated yet. There are a lot of risks that are still on the horizon for digital integration, isn't there?
Sure, I totally agree. And the interesting bit, and this is what I say, is that of course digital integration is happening in a fast-moving pace. Technology that was there yesterday is not there today, and we don't even know the technologies of tomorrow. So I think the case of Africa is this case of building as we fly. But we have the fundamentals. The fundamentals, as Prof has mentioned, is we have a functioning Africa Union. We have regional economic commission. So we have these policy platforms that if made agile enough, can quickly respond and trigger those mechanisms that improve integration. We have the largest free continental trade area. And as I say, we don't have all the answers, but we have the fundamentals. The second piece, as you mentioned, is now understanding that as we are going into the fourth industrial revolution, we need to start investing in the infrastructure of the fourth industrial revolution. And this is something that I think we've seen from the leadership of His Excellency, the President Kenyatta here, is not necessarily investing in technology, is investing in the infrastructures that create resilient technologies. One is data and data systems. The second one is internet infrastructure. We know we need broadband for that integration, of course, of digital economy. The third one is skilling and upskilling. And I know Prof has mentioned this. We have quite a high skilled population, but we need to be able to skill and upskill. The fourth, of course, is energy. How do you ensure that we have energy that is sustainable and resilient? As we know, Africa is only a third of Africa is connected. The fifth piece, and this is where we are getting it right, is agile governance and ensuring that policies that we put in place are not stifling innovation, but are ensuring that innovation thrives even beyond borders. And that is why I see these regional economic commissions and the African Union Commission, including our infrastructure like the Africa Development Bank, the UN Economic Commission for Africa, are creating that, I say, ecosystem that then creates a foundation for resilience going forward. And I think we're the only continent that does that at the moment. Over.
So, it's very interesting. Professor Yorama, who happens to be a leading thinker on Africa's sustainability, I'm sure you two have a lot to chat about there. Professor Yorama earlier mentioned that Africa is going to be a leader in achieving global SDG goals. We are 9 years away from achieving the UN designated SDG goals by 2030. And well, Africa has a lot of youth. Africa is a burgeoning economy, particularly in sub-Saharan Africa. And all of these means that Africa wants to grow. But a lot of times when you invest in sustainable investments, you do sacrifice on the returns on investment, don't you? How do you balance the two objectives?
Well, the returns picture has evolved considerably over the last 5 years, where it's not clear that you do sacrifice returns. But I think the main important thing, picking up on what's been said already, is that there's tremendous potential building, and one of the big things that sustainability and sustainable finance needs to focus on is making sure that that doesn't get tipped off course by things like climate change, which by and large Africa has a very small role in creating. And so I think that's one of the aspects where the investment side has to be really focused, and developing financial system has to be really focused on making sure that there's the resilience in financial systems to support the continued development on the technology and fourth industrial revolution. And I think we've seen some big opportunities and challenges that have come out just in the last week with the announcement from President Xi at the UN Global Assembly about the cessation of international coal financing. And I just found there was a quote sort of as some of the banks have followed the government's policy from a Boston University Global Development Policy Center professor, Kevin Gallagher, saying, if the pledge includes commercial banks, it's more ambitious than anything the West has done, and it's going to have a huge impact in Africa in terms of immediate investments that don't happen, and figuring out how to channel those into directions that support building the energy infrastructure, which is one of the points brought up just a minute ago as one of the key needs to make sure that the next 9 years go sort of according to plan and don't get derailed.
Right, it's really interesting. So a lot of China's push towards carbon neutrality 2060 is actually creating a ripple effect, as we witness today, across the developing world, and I'm sure that's going to be a sort of a positive for Africa's sustainability as well. But Professor Uemara, you mentioned that Africa single-handedly holds over 30% of the world's natural resources. It's just so instinctively attractive to think, hey, we're going to mine the resources, and that's how that's the assets we have, and that's how economies can grow. How do you convince these government leaders?
Yeah, we lost Professor Shelley. But are you hearing me so I can respond to her question? Okay. Now, the points are really very clear in terms of, I always say, in Africa, the imperatives for going green and going inclusive and sustainable cannot be gainsaid. In the first instance, African economies currently, in all intents and purposes, is green, but not inclusive. So the sustainability angle for me is about triangulating three things. One, the economic development goals of countries, the sustainable development goals of the world, and also the social development goals of countries. And when we have the social capital, the natural capital, and the biophysical capital together, then we'll be able to have some form of equilibrium in nature that will allow us to continue to harness our natural resources for development going forward. The second imperative for me is that Africa is not really benefiting from what I call oxymoronic harvesting or extraction of natural resources at the moment, because, like I've said, we import raw materials at very low end prices. And from my analysis, our analysis in the African Development Bank Group, we've seen that the real prices just deflate by inflation. Yeah, the real prices of most of Africa's primary products in the global export market has been trending downwards since the 1960s, which means that you are losing money selling them raw. So what Africa needs to invest in more is in technologies and innovations. And this investment, that's why you see this focus on technologies and innovations in Africa. And that focus on technologies and innovations achieves one thing. In economic theory, we know that the rent in markets go to the technology owners. So the more Africa continues to invest in technologies and innovation, we will be able to operate at higher efficiency levels in the economy. And that higher technical efficiency also leads to higher market efficiency and economic efficiency. And our analysis in the International Resource Panel also shows that countries that has moved to these higher efficiency levels just automatically decouple economic development from environmental harm. We see that in the United States, we see that in Europe, we're now beginning to see that in China as well. So poverty in itself and operating at low levels of development is bad for the environment. And if you see in the energy sector, which I've studied quite a lot, if we only decoupled Africa's cooking systems from firewood, even if we used coal-fired power plants to provide electricity and give people, cooking hobs so that they don't go cutting down the trees and using firewood, will reduce CO2 emissions in Africa by almost 80%. So it is a win-win for Africa to go green, to try drive inclusive growth, and Africa actually seems to be the continent that has all the fundamentals to be able to do that, because again, we don't have the lock-in in infrastructure that many other countries already have in the what is called brown economy. But having said that, it is not a binary choice for Africa. In energy, in agriculture, in technology, the overarching goal will be to triangulate those three angles: economic growth to improve the welfare of people, social equity to ensure that there's inclusive development, and also managing our natural capital sustainably for longer. So Africans are known for the culture, what we call the Ubuntu culture. We don't rely on individualism. We rely a lot more on you and I. It's a we culture instead of the I culture. So I exist because you exist. Contrary to some other cultures where it's I think, therefore I exist. So for us, no matter how you think, you exist because of your neighbor. So we exist because of also of our children. So intergenerational equity is embedded in Africa's culture. So that idea of keeping the ecosystem safe was there in Africa even before we started talking about sustainable development goals. And Philip knows that we have sacred forests, we have sacred goats, sacred cows, sacred all those things to protect the stock of that natural capital. And this was the wisdom of our forefathers. So for me, sustainability is natural to Africa's economic growth paradigms. And it's only for us to build organically and not copy the kinds of development paradigms that we have seen from the rest of the world. In agriculture, we have mixed cropping, natural to Africa, rather than monocropping, which creates all the environmental harms. So Africa should think home more and build organically instead of copy development paradigms from outside. That's good for sustainability of the world. Thank you.
Well, absolutely. Well, Professor Irama, you have you work at the African Development Bank, and so you would be the absolute authority to say that Africa needs lots and lots of investment in infrastructure, not only for digital but also for economic sustainability. But when it comes to investing, Blake, of course, you are a full supporter of sustainable investment and sustainable finance. But I would say when the continent is so in dire need of investment in infrastructure and on a massive scale, if there are investments coming into the continent, and the continent, the natural instinct would be to say that I want all the investments that are coming in, right? But are you saying that we should make a differentiation to ensure that sustainability starts at the beginning, at the early stage of development? And how do you ensure that?
Yeah, I think one thing that we talked a little bit about, sort of the time frame that we're talking about here, of the long term, and one of the things that really slows or limits the ability to focus on the long term and sustainability issues, and something that we've found from some research we've done, is that high levels of indebtedness by companies hinders the ability to have a margin of safety against sustainability-related ESG risk, environmental, social, and governance risks. And so, as much as the investment is needed in infrastructure, I think there's also has to be a focus also on how does that meet the needs only of the present at the expense of the future, which tends to make it unsustainable, whether you're talking about infrastructure in Africa or housing in the United States. And so what we found is that even in less sustainable sectors where there's investment going in to make it more sustainable, one of the key things that helps benefit investors and ultimately benefit everyone through making the investment successful is avoiding over leveraged situations. And what we've looked at this in the context of comparing Islamic screens and overlaying them on a sustainable investing approach. And it's really on the transitioning and the improving sustainability performance of particular sectors that this comes into play, where you can win a lot more by giving yourself that margin of safety and not going for every available opportunity, no matter how much debt gets piled on in the process. And I think that's going to be important for everywhere in the world going forward, because the impact of climate change is going to be more and more intense as the years go by, and Africa has a lot of exposure to the physical risk impacts, and so it becomes even more important to just be cognizant of
right.
that.
So Sure. Very interestingly, like you talked about debt sustainability, and I'm sure Professor Yorama, you have heard as well as we do throughout global debates about Africa's debt sustainability, and there has been a lot of mentions about debt traps. And China single-handedly holds on to 20% of Africa's debt post COVID-19, and is indeed a large debt holder. So now for Africa, in terms of looking at future development, will Africa borrow even more from the current leverage? Is there a choice? Is there an alternative for Africa to borrow less?
Okay, these are very complicated questions that needs a very complicated answer in many ways. Before I go into that, let me just try and address the other question that that's already been addressed just previously, in terms of the fact about whether Africa should prioritize one investment against the other. This is a question I grappled with for many years now, in terms of how do we drive inclusive and sustainable development in Africa. Let me come back to what I call the golden triangle of sustainable development. We cannot achieve sustainability by keeping people poor, because poverty engenders environmental degradation. We see that in agriculture, we see that in households, we see that everywhere. So the first thing to do is to actually ensure that every environmental policy is not slowing down economic development, especially for countries that have not reached that inflection point where higher efficiency, technical, economic, and physical efficiency has been achieved. If you keep countries at that level, they will just continue to pollute the environment. That's not good for anyone. So, and at the same time, we should also not expect to have economies that are operating at a very high GDP growth rates and per capita GDP growth rates beyond what is necessary. So the whole idea about trying to give space for transitions for countries that are low income is necessary, and is actually embedded in the COP21 agreement and in all sustainable development discussions that I have been in globally. So the current approach of maybe trying to create a trade-off between investments, whether it's green, brown, or yellow, or whatever color we brand it, and development, I think is a wrong approach, because it creates environmentalism as a trade-off with economic growth. And once you do that, the poor will want to gain access to economic welfare today, because economic theory, because this is London School of Economics, economic theory tells me that the discount rate of the poor is very high. So they will prefer $1 today than $200 tomorrow, because they don't even know whether they will survive till tomorrow. So if we don't give them that opportunity to grow to that level where the economy is stable enough and able to sustain high level of technologies, high value added products, and so on, we will continue to exploit the environment oxymoronically. So let me just put that aside. And then on the point that you have, so for me, the whole issue is to find an equilibrium between the three: the social, the economic, and environmental goals. That's the only way we achieve sustainability. So that's one.
Absolutely.
Then the question you've asked me now in terms of
we have to balance the
What was the second question, please? I have forgotten it. What's the question you asked me now?
I was going to ask you, Philip. I was going to ask Philip your thoughts here.
Okay.
Professor Yorama mentioned earlier that China has become a major supporter of Africa's digital infrastructure and digital transformation. And I believe Professor Yorama used some words that are expressed as complex and enduring impacts that are brought by China. Give us some sense, Philip, of the actual scale and the depth of China's digital engagements in Africa, please.
Oh, the scale is massive. If you think about especially the sort of the hardware piece of technology, I think it's one of the companies. I think Huawei is the one that is most dominant, and we're talking about from base stations to sort of fiber cables to switches. I mean, it's quite extensive, and we're seeing now China, including handsets, right, has one of the most affordable handsets, and I think China investments around handsets has really brought down and created sort of affordability and accessibility to mobile phones. As I mentioned previously, we have generations that are mobile only. And I think this is simply because handsets have been quite affordable. And this has lowered the barrier of access to technology. The second piece, and what I'm seeing is around policy, and this is in the case of Kenya, where we are seeing China and Chinese companies are very much involved in how to ensure that our last mile technology is actually affordable and accessible to population, especially in rural areas, where in most cases other companies may not have found it profitable. So we are seeing that kind of collaboration and co-creation, which is what I think the future must hold. The third piece, I think, is this notion, and I know Professor Rama, you'd know this. I think the whole notion of we do not need to westernize or easternize. I think it's really about modernizing and modernizing within our context. And this is why we've seen, for example, affordability even of Wi-Fi routers. I've seen public Wi-Fi access very much built on top of Chinese technology. As we talk about 5G now, again, I'm seeing China working closely with Africa to go into that next phase of connectivity. And I think finally around our sort of environmental goals, and this is somewhere where I'm seeing now to the extent of, and I call this a Joshua generation, basically between China and Africa, having learned from previous investments, but thinking through because of our connectivity, talent, networking, and even language. We've even seen now CGTN. It's one of the largest Chinese news networks in Africa, even showcasing and featuring more these collaborations. So as Professor Rama says, it's complex, but I think how we harness these collaborations in a way that showcases the possibilities of this collaboration in a very equitable footing, then can be the only way we go into the future. Over.
Okay, I think we've lost Prof again. But then if you're hearing me, let me take the opportunity to address the question she asked about debt. Yeah, before she comes back on. You know, on the question of debt, I always talk about debt productivity, not the absolute debt to GDP ratio. Debt financing is a sure way of doing business everywhere, both for governments, public, private sector, and so on. But the question is not how much you borrow. The question is what you do with what you borrow. Because if you're borrowing for productive investments, and the productive investments has a good yield curve that will allow you to repay the loan and also make profit, that's a great business to do. And that's how every economy, whether in the private or public sector, grows. The problem in Africa and the developing world is what are the terms of the borrowing, what do you borrow for, what do you do with the borrowing, and what's the transparency and accountability associated with the borrowing on behalf of the public. In China, since 2015, China became the largest creditor for Africa, representing about 13% of Africa's debt, total Africa's debt. And by last year, debt service to China is estimated to, by this year, is estimated to be about 6.5 billion debt service. So the question here is if we are paying those interests to service the debt, what have we done with the debt that we got? And that question is for Africa to answer, not for China to answer, because the creditor wants to lend. The borrower needs to borrow reasonably. So we need the issue about public financial management. And this is why the bank has developed and launched a debt action plan for Africa to start moving countries towards this issue of debt productivity and debt sustainability, rather than just borrowing for recurrent expenditures and more and more. And more generally, trying to create transparency and accountability in public financial management systems across the continent. Thank you.
Very interesting. So now, when it comes to investing in sustainability, it's inevitable that countries and regions have to develop a vibrant capital market. And I think one of the experiences Professor Urama has mentioned, quite a number of lessons that Africa could potentially borrow from the Chinese development experience. However, one thing, if I may add, is that China has developed a vibrant capital market over the past 4 decades. China's stock exchange is the second largest in aggregate in the world, right after the United States, and China's bond market is currently quite wide as well. So where do we stand with Africa's private capital market emergence at the moment?
Philip, are you going first or should I go first?
I know, Philip, in the private sector, you do need a lot of private capital financing, right? But as a old gentleman said, you have mentioned that Africa is actually, we would love to think that Africa is a unity. And ideally, that should be the way. However, currently, in terms of the digital rights, Africa is actually quite differentiated, isn't it? So there are different pockets within Africa that are really, really vibrant in terms of technology and digital startups. So give us an idea, who are rising in Africa?
Thank you so much. I think, and this comes back to, I think, how we started the conversation around the fundamentals in terms of countries that have good laws and legislations around private investments, are relatively independent press and media, investments around digital infrastructure, a good ease of doing business index. So it will be those relative countries and countries that kind of are relatively stable in terms of democratic values and principles. So of course, bias, Kenya, without blinking, Nigeria, of course, Rwanda being punching above its weight, Mauritius, Cape Verde, that people don't really talk about, and that is really moving around this sense. Of course, Egypt in terms of space and space industry. When you come to Uganda, in terms of artificial intelligence. So when you look at these countries, and this is what I love about the continent, countries are finding niche areas around digital and technology. Ethiopia, we've seen now Ethiopia opening up. They've just opened up Safaricom. We know they're opening up another license in terms of telcos. When you come down to Tanzania, which people are not seeing, Tanzania is also coming very strongly around technology, especially around education and edtech. So we could work around an interesting map in terms of how countries are beginning to see how potentially their ecosystems can take advantage of their competence and capacity so that they can compete. So it's, as you're right, it's not the same all over the place, but then it's interesting that countries are finding niches. Finally, women, and I know this is a topic we've not mentioned. As much as we're seeing countries, there's a demography that is again pushing very strongly around because of STEM, of course, science, technology, engineering, and math. And surprise, surprise, Sub-Saharan Africa is the only part of the world where there are more women entrepreneurs than men. And now we are seeing them more harnessing technologies in terms of their small and medium enterprises. So this for me will be the trends to watch.
Very interesting. Well, we are coming to the end of our session, but I do want to bring in a question from our social media audience. It's basically asking quite a challenging question. I don't know if any of us would love to take on with that one. How will political stability be guaranteed in Africa, particularly with the recent events that are taking place?
Okay. Maybe I will take a stab on that one. The issue of political stability is a process. And I think one of the challenges we have in Africa is that we want to leapfrog in everything. It takes years to build democracies, and Africa's democracies, from all intents and purposes, are still very young. So when you have an incident generalizing to try to talk about political stability in Africa, for me, is an overshot in how people react to things. And if you look at Africa and successful elections, democratic transitions, we have several examples everywhere on the continent, and there is no region in the world where political stability is guaranteed. And I think we can look at recent, even countries where democracy came to from us. Democracy is always challenged, and that is why it is democracy. And it is the ability of the institutions to sustain and bounce back that matters more than the challenges that happen. And that's what you see. That's what I love about America and many other countries in Europe, where we have seen blips in democracy, but then you find that the institutions bounce back and have a correction and continue to move forward. So for me, Africa's democracy has improved significantly. Without that, we wouldn't have seen all this good progress that we have seen in the past 2 decades. And then you asked a question which we jumped, which was the issue about the capital markets in Africa. The same way that you see in technology revolutions, you see different capital markets in Africa strengthening. But for me, we need to grow deeper and create pan-African markets that will be able to deal with the currency questions in order to fast track the leapfrogging in capital market development on the continent. But that could be another topic for another day.
That is so enormously interesting. Well, if I may just add a quick commercial for not that Mr. Jing Donghua needs any at all, we are going to welcome Mr. Jing Donghua, Vice President and Treasurer of the World Bank, for our special luncheon dialogue. But before that, Jing Dong has very graciously done a fireside chat with us ahead of time, and in which he did talk about the excitement in the Pan-African continent, and he's very hopeful. He said the reason that Africa has started later with its development process was because of a lot of the regional unfortunate wars and conflicts and etc. And up till the 1990s, Africa, given the past 2+ decades of development, Africa has done an extraordinary job. And so for any of our social media audience who have some time to watch Jing Dong's fireside chat with the LSE, I highly encourage you to do so. It's absolutely fantastic insights in there. And so is our panelists today in today's session. We certainly have shown the great ambition from the African continent. And so with that, allow me to wrap up and thank our amazing speakers, Professor Urama from the African Development Institute of the African Development Bank. It is coming on behalf of President Adesina of African Development Bank. Philip Stiegel, Senior Advisor to the Deputy President of Kenya on digital and data technology. Blake Gold, CEO of RIF Foundation and a leading global thinker on sustainable finance. I thank you so much for your time, and please join us for the next session coming up, One African Market under AFC FTA, hosted by our own Professor David Luke. See you soon.
Thank you. Thank you.
Thank you.
Thank you, Flip. Good to see you again.
Hello, everyone. In this video blog, I'm going to provide a short introduction to the AFCFTA agreement, that is the African Continental Free Trade Area Agreement, what it's about, its rationale, its prospects, how it is structured. So let me begin then with the rationale of the AFCFTA agreement. And let me introduce three sets of stylized facts about African economies and the structure of African trade. Firstly, Africa has a population of about 1.2 billion people. And Africa's continental GDP is about 2.5 trillion US dollars. This, of course, is pre-pandemic. Now, this is about the same as that of India. India has a population of just over 1 billion people, and India's GDP is also roughly 2.5 trillion US dollars. However, unlike India, Africa is 54 countries, which means 54 markets, and these are relatively small markets. So one of the ideas behind the AFCFTA is how you can create a continent-wide preferential market that will encompass Africa's small country markets in order that the continent and these countries within the continent can benefit from economies of scale, economies of scope, investments that are viable and so on, and drive the development trajectory. So this is one of the ideas behind the FCFTA. Then secondly, when you look at the structure of Africa's trade, when Africa trades with the rest of the world, it trades mainly commodities, that is minerals, fuels, agricultural products, that sort of thing. Now, when Africa trades among itself, that's inter-African trade, we find a much more diversified basket of goods and services. So you find more value-added products, more industrial products, food, and then services such as, of course, financial services, which are very strong on the continent, communications, transport, tourism, and so on. So a much more diversified basket of goods and services when Africa trades among itself. Incidentally, Africa's export services are almost negligible. So then thirdly, when you look at average tariffs, when Africa trades with the rest of the world, it faces relatively low tariffs, only about 2%. But when Africa trades among itself, outside of the current regional economic communities, it faces average tariffs of about 8%. So that too is another rationale of the FCFTA to engage in significant liberalization, trade liberalization on the continent to bring tariffs down to zero. And indeed, the agreement has provision for about 97% of goods traded on the continent to have tariffs of zero, and to achieve this over a period of 15 years. So essentially, these are the ideas behind the AFCFTA. I should emphasize that all of this will not happen automatically, of course. The agreement needs to be fully implemented. There's going to be need, of course, for investment in the productive sectors, but also in areas like infrastructure, dealing with supply side bottlenecks, trade facilitation, border reforms, and so on. All of this is going to be important if the agreement is to deliver on its promise. And indeed, let me also say that in terms of the prospects of the agreement, the economic modeling work by the IMF, the World Bank, UNCTAD, the UN Economic Commission for Africa, all point to very good prospects for this agreement, that if it is fully implemented, that it will have significant impact on overall welfare, on GDP growth, on intra-African trade growth. It would have impact on poverty reduction, on jobs creation, and so on. So significant prospects for the agreement if fully implemented. Let me also now turn to the structure of the agreement itself. Essentially, it rests on four pillars, what you might call, firstly, a framework agreement, a protocol that deals with the legal issues, that is the objectives of the agreement. And incidentally, the objectives talks about sustainable development, it talks about gender equality, it talks about industrial development, and so on. It also covers legal principles like national treatment, most favored nation status, which you find in a staple of trade agreements. It does require each country that is a party to the agreement to ratify it, that is to incorporate the provisions of the agreement in its domestic law. And so it covers these sorts of issues. It also limits membership of the agreement to the member states of the African Union. Then secondly, there's a protocol on trading goods, which covers usual aspects such as the rules of origin, customs cooperation, cooperation on trade facilitation, on border related issues, provisions against dumping, and so on. Then there's a protocol on trading services that establishes the principle of progressive liberalization of services, that also identifies that the services sectors that would be prioritized for early liberalization. Initially, 5 of them have been selected. That is business services, communications, transport services, financial services, and tourism related services. And then the fourth protocol is the protocol on dispute settlement that outlines how disputes among the parties to the agreement will be resolved in case issues arise, and inevitably with trade agreements, issues always do arise. So the fourth protocol deals with this. There's also provision for an additional 4 protocols to be negotiated. These will cover intellectual property rights, investment, competition policy, and e-commerce. Now, let me end by saying that this agreement does have very strong prospects for changing the African continent in a significant way, for achieving, in that hollowed phrase, structural transformation of the continent, for engagement in regional value chains alongside global value chains, for significant impact on jobs, on employment, on investment on the continent. So it's an agreement with tremendous promise. However, the caveat, which I've emphasized throughout this this video blog, is that the agreement needs to be fully implemented for all these benefits really to be translated into reality. So thank you very much for listening to me, and I do hope that you found this outline of the agreement useful. Thank you. Hello, can you hear me? Hello, everyone. Yes, you can hear me? Great. So let's get started. So welcome, everyone, wherever you are. Thank you for joining us for this session on Game Changer, the African Continental Free Trade Area for One World Market, in the inaugural China-Africa conference organized by my colleague, Professor Shelley Yu, who leads the China-Africa initiative at the Firoz Lalji Institute for Africa at the London School of Economics and Political Science. I'm David Luke and chair of this session.
let me begin with a short introduction to follow up on the video that you have just seen. If fully implemented, the African Continental Free Trade Area, or AFCFTA, is widely perceived to be a game changer for Africa. Recent economic modeling results provided by the UN Economic Commission for Africa and the World Bank each project a positive impact on growth, GDP, and welfare, with knock-on effects on industrial development, employment, and poverty reduction. The AFCFTA is expected to provide a significant boost to intra-African trade, which can also provide a pathway to improve Africa's performance in world trade and enhance the diversification of exports to the global economy. With China as a major trading and investment partner, these projections have profound implications on how the China-Africa economic relationship, and indeed also the economic relationship with other major partners such as the European Union and the United States, will evolve. Moreover, the game-changing aspect of the AFCFTA will unfold at a time when markets are becoming increasingly responsive to climate-friendly production and trade systems, requiring trade sustainability within the AFCFTA. We'll probe these issues in this session, and we'll begin with the streaming of pre-recorded remarks by Ambassador Alan Wolf, former WTO Director General, and currently a distinguished visiting fellow at the Peterson Institute for International Economics. This will be followed by a panel discussion, and I see the panel is online. So let us begin with the streaming of Ambassador Wolf's remarks, after which I will introduce the distinguished panel to discuss the issues. Could we have the Ambassador Wolf's remarks, please? Great.
I first came to Africa, it was to Abidjan in Ivory Coast, just over 50 years ago. It was to participate on behalf of the US Treasury in the drafting of the Articles of Agreement of the African Development Fund. My most recent trip to Africa was to Addis Ababa in late February of last year, just before the pandemic curtailed travel. I'd gone to Ethiopia to meet with representatives of 9 African countries seeking entry into the WTO, the World Trade Organization, as well as with Ethiopian officials about their own country's application. These 2 visits are the African bookends of my career in public service. Well, not quite. On a brisk, clear morning, a week later, on March 1 of this year, in my last official act as co-acting Director General of the WTO, I stood on the front steps of the WTO to welcome its first African Director General and first woman in that position, Dr. Ngozi Okonjo-Iweala. It was a day full of promise for Africa and for the WTO. My purpose in talking with you today is to put the Pan-African Agreement in the context of the global trading system, a system embodied in the World Trade Organization, and the great possibilities that exist for both the African Continental Free Trade Agreement and the WTO. The AFCFTA should be transformative. It is a blueprint for the freer movement of goods, services, and people across Africa for the benefit of all. According to the World Bank estimates, the Pan-Continental Agreement could lift 30 million people out of extreme poverty. As the largest free trade area in terms of number of participating countries, the FTA can provide the economies of scale needed to attract investments in higher value-added production, generate innovation-driven growth and entrepreneurship through linking the markets in Africa. While concentrating on African regional growth should be a top priority for Africa, it should never be forgotten that most of the world's markets lie outside of Africa. Africa accounts for 20% of the world's population, but only 3% of global GDP. Even with African growth above the world average, a 2-track model is needed, substantially improving intra-African trade while deepening engagement with the rest of the world. What is required is not only an increase in cross-border trade in Africa in agriculture and raw materials, but also in industrial products and services. Africa must also accelerate deeper involvement in global value chains, as Southeast Asia has done so successfully. Regional integration is not a substitute for global engagement. The 2 are complementary. Regional and multilateral integration through membership in the AFCFTA and the WTO can knit together an African continent that can help unify and amplify Africa's voice on the global stage in pursuit of sustainable peace and development. Economic connectivity can bring inclusive and sustainable peace, political stability, and higher standards of living. One important means to enhance the prospects of success, integration agenda is participation and engagement with the WTO. Not Libya, Somalia, South Sudan, and Sudan, WTO countries that all session represents a tool rule of law and transparency.
Okay, it does appear that we have a technical hitch with the video, but that is that's not to be an issue as such. We can proceed and go directly into the discussion. So let me begin by introducing the panel. We have with us Ms. Hannah Ryder, who is the Chief Executive Officer and founder of Development Reimagined. We also have Mr. Nkosana Moyo, who is an economist and physicist and former Chief Operating Officer of the African Development Bank Group. I do believe that biographies can be found on the conference website. So let's get straight into the discussion. In Ambassador Wolf's video remarks, he makes the point that the enhanced trade integration in Africa through the AFCFTA should not mean less trade with the rest of the world. He says a two-track model is needed, substantially improving intra-African trade on the one hand and deeper involvement in global trade on the other. How can African countries individually and as a region accomplish both? Could we start with you, Hannah, and then go on to Nkosana? Hannah, you have the floor.
Well, thank you so much for the invitation to be part of this discussion. It's wonderful, and thank you very much, David, for your introductory remarks and also for sharing the remarks of Ambassador Wolf with us as well. This is a really important question. Some of you may or may not know what my firm does, but one of the areas that we work on is trade. African trade, and in particular, trade with China, Africa's trade with China. So this is an issue, a question close to my heart very much. I think I fully agree with Ambassador Wolf. I think these points are not mutually exclusive. Trying to improve regional integration, trying to improve trade does not mean that we can't also improve the exports with other development partners. At the same time, of course, we need to remember what the prize is, and it is overall economic development. And so we must really keep that in mind. And in that respect, I think one of the points that you mentioned, David, in your opening remarks was really important, which is the fact that particularly with with other exporters, with other development partners to whom we export, our trade tends to be more focused on raw materials or unprocessed materials. This is very important to take into account because that is, some of that is historic patterns, but it's also, for instance, even with fairly new trade partners, now our largest bilateral trade partners such as China, that pattern still exists. And it affects the overall balance of trade with the partners. Because we have to remember with trade, you can always increase trade through volume, but you can also increase it through value. So I think what we need to do in order for that strategy not to be a sort of, in a sense, a distraction, in order for trying to also at the same time increase exports to development partners, so that that's not a distraction, what we should be doing with our strategies for development partners such as China is to really focus on increasing value added trade. This will really add a lot of complementarity to our regional integration strategy, and will also support job creation. So that's my starting point, and happy to go into more detail about exactly how that could work. But that would be my suggestion.
Yeah, thank you very much for that, Hannah. And indeed, I like that phrase that we should keep our eyes on the prize, which is economic development. Over to you, Nkosana. Hannah said and agreed with Ambassador Wolf that intra-African trade and Africa's trade with the rest of the world are not mutually exclusive, but complementary. What are your thoughts on this?
Thank you very much. And yes, like Hannah, I agree with that observation. In fact, I'll put it slightly differently, and I'm going to illustrate this. If Africa opens up and it becomes easier to trade within the African continent, it's going to be much easier to attract investment. So let's look at it from an investment point of view, and I'll use Mercedes-Benz in South Africa as an example. You see, if you are able to attract global investors who are manufacturers elsewhere to come and manufacture on the African continent, because their brands are already accepted and recognized globally, it's much easier for them to then use Africa as the starting point for selling those finished products elsewhere. And that's what Mercedes-Benz did exactly that out of South Africa. They were attracted into South Africa to assemble their vehicles in South Africa. I think the C-Class is assembled almost virtually in South Africa. But because that brand is accepted globally by Mercedes, so South Africa is not doing the selling, if you see my point. Mercedes itself is doing the exporting out of South Africa. So it actually becomes much easier for Africa to accomplish the two things. You achieve economies of scale in terms of your intra-Africa trade, because you can attract investors of scale from outside to establish. If you look at a Malawi and a Lesotho, a Swaziland, if you say to an investor, by manufacturing in Swaziland, your market is not restricted to Swaziland, it's just a base, but you can sell on the rest of the continent. Much easier for them to do that. And at the same time, much easier for them to then take their product from there and now as an African product, take it globally. So the two, in fact, complement each other.
Thank you very much for that insight, Nkosana, approaching this issue from another direction, as you said, investment and very interesting illustrations of this. Now, of course, the world is changing. Markets are becoming increasingly responsive to climate change, to factoring climate change sustainability into production and trade patterns. So now this is the new world into which the AFCFTA will be implemented. So what are your thoughts on achieving trade sustainability in this new era that we're entering? Again, Hannah, could you go first?
So I think we're in a really a very interesting transition point. I mean, just a few days ago, we had an announcement from China that it will not be financing overseas coal. and other countries have said the same previously. There are concerns about whether financing for oil and gas will continue, foreign direct investment into oil and gas will continue, and that could be an issue in terms of manufacturing. So there are questions as to if we're talking about increasing trade. In order to increase trade, and especially added value trade, you must increase manufacturing capacity, which is what Dr. Nkosana was just talking about. How do we have green manufacturing? It's a fundamental requirement for green trade. In addition, we also need green logistics. So green manufacturing with green power. We also need green logistics. What is green logistics? We still need to establish that. On the African continent, we're behind in terms of rail, in terms of roads. So there's a lot more to do, and we've got a lot more developing to do. So this feels like a significant challenge. At the same time, we can also look at this as an opportunity. The fact that we have yet to grow and we have yet to develop the manufacturing means that if we work with those the partners that we have, such as China, and we encourage foreign direct investment to come in, which is of higher quality in terms of such as renewable energy and larger scale renewable energy for manufacturing, then that could be a means of doing that. I think that also means that we need to be we're working, the UN Economic Commission for Africa is working right now on a strategic environmental assessment of the AFCFTA and looking at the different protocols. And even though the AFCFTA does not specifically say that environment is important, there are great opportunities to be able to take that into account without the idea of putting development back, keeping our eye on the prize. So, for instance, the protocols on investment and competition are still open. The e-commerce protocol is still open as well. It's still to be developed and finalized. There are opportunities to create and enable extra incentives, for example, for countries that would like to be really trying to push and attract green investment, then ensuring that that the protocols are open to that and that they have stronger incentives for the green investment rather than the brown investment could also be a useful way forward. So these are issues and questions which are being discussed, but I think we're at a very interesting transition point right now for African economies.
Yeah, thank you very much for that, Hannah. And indeed, yes, there is an opportunity as the AFCFTA moves into additional negotiations of protocols such as investment that you've mentioned, but also intellectual property, commerce, competition policy, and so on, to anticipate what the market requirements going into the future would look like, and how to factor that in already. And of course, as you say, also the challenges of green logistics, renewable energy, and so on. These are also investment opportunities. I'm sure this is a point that Nkosana would agree with, given the emphasis he's already put on investment. So, Nkosana, your thoughts on greening the AFCFTA as we move forward?
Well, I think the evidence of what is happening globally in terms of whether it's wildfires or floods all over the place, at least now, the evidence forces us to converge, at least in our opinion, that this is not an option. It's not an Africa issue, it's a global issue. We have to do it. The migration absolutely has to happen. So that's an important starting point. I think a second important point is that Africa is not yet heavily invested in the old technologies. Our investments actually are very thin in the old traditional, dirty, if you like, polluting technologies. So for us, the migration is also relatively painless. It's more a question of adopting technologies that have already developed in the renewables and channeling our energies and resources in that direction, as opposed to channeling them in the old. There is very little to walk away from. Unlike other countries, more developed countries, the price for them to migrate is quite heavy. For us, it's still very little. So I think we sit in a very good place in that respect. And thirdly, we are very lucky because if you look at solar energy, for instance, we are highly endowed with solar energy. When I travel, let's say, to the Northern Hemisphere, and I see how much effort is going into investing in solar energy when they hardly have the sun for most of the year, I mean, we are sitting on this resource. And again, for us, on a relative basis, it's a very easy transition to make. So we have to accept it's got to be done, not just by us, but by the whole world. So we are in good company. And then the cost for us to migrate is very low. We've got the resource in big sort of numbers or quantities to exploit. So I think we sit in a good place and we need to be positive about it. I think lastly, what I would like to point out though, is that Africa needs to change its mindset from wanting to own investments, in my opinion, to being able to host investments. Once an investment is made in your territory, in most cases, the investor cannot just up and say, I'm taking it away. The forms in which these investments are made, it essentially becomes your investment even if you didn't put capital into it. So my view is that we need to get smarter, attract investment and host it, rather than insisting on owning and having to mobilize the finances ourselves. Let's get smarter about this. And if we do, we can do it very easily.
Yeah, thank you also for that. Again, some very interesting insights here that the transition for African countries will be and is and will be relatively low in terms of cost, just given the starting point. Let's move on. One of the challenges, of course, of the AFCFTA is that
David, I think Hannah wanted to say something.
Yeah, go ahead.
If you don't mind, I mean, sorry, I'm just gonna come in on a little bit further, because I did like what Dr. Nkosana was saying about.
Nkosana is fine.
Thank you. I liked what you were saying about changing mindsets. And also, I think there's a further mindset that we also that's really important to bear in mind here. And I really think it is this idea of opportunity. If you look at Agenda 2063 and you look at there's a letter in which was written, kind of part of it. I don't know if any of you have read it. The letter to the future, right? Written to Kwame. And it says that we see the African economy is the third largest economy in the world, right, by 2063. Now, that is quite a vision. And we know China, for example, has come up to be the largest, and in some people say the second, but others say the largest economy in the world. So if we are going to be that, we have to really, and especially if we're thinking about trade and manufacturing, if we are going to be the third largest economy in the world, how we need to be thinking about that future, what that future really looks like. And that's why I thought that letter was very interesting. Yeah. But if we're not envisioning, what does green manufacturing really look like at that point in time, then I think we're sticking in, if we're really worried about gas, if we're really worried about oil and extractives, yes, it's really about what does that transition look like? How do we accelerate that transition to the future, to that new future? And we've been stuck in this place for a very, very long time. And how do we engage our development partners in that transition and in that vision? And I think that's one of the biggest challenges going forwards, and requires that mindset. So in addition to kind of hosting rather than ownership, I think there's that mindset of vision, and then getting our development partners also to change their mindsets too about where we're aiming for. We're really aiming high.
Yeah, Yes, I think, thanks for, referencing that letter. If I do recall, it was written by the former chairperson of the commission, Madame Zuma, to Kwame Nkrumah, of course, an imaginary kind of letter, but indeed spelling out these sorts of issues. And actually, the point you're also making, Hannah, is that even after this letter has been written, there are new issues that are emerging that still need to be looked at. And so, in a sense, it's a letter that needs to be constantly updated. And that speaks to changing the mindset that we need to be on our toes, to be looking, scanning the environment for what's going on there and how best to respond to that. Let me move the conversation on to say that I think we all agree the AFCFTA is an important part of Africa's development strategy going forward. But we also need to ensure that this strategy is inclusive, that it deals with issues of inequality, that it responds to gender aspects of equality as well, and also it responds to the aspirations of Africa's youth. And I would say that if the AFCFTA is not able to do this, then we're in deep trouble, just given the demographics, of course, which speaks to the youth situation, but then also the state of inequality on the continent. Looking at Gini coefficients for any African country establishes that very, very well. So, Nkosana, let me turn to you now and to see what your thoughts are on this issue of the AFCFTA contributing to broad-based growth and equality on the continent.
David, if you allow me, I would like to try and approach your question slightly differently, because my view is that inclusivity should happen with or without the ACFTA. So I don't like the attachment of the ACFTA to inclusivity, as if inclusivity should be dependent on it. But what we can say, and I think agree on, is that the quality of that inclusivity, the quality of life on the African continent can greatly be improved if in fact the ACFTA succeeds. And therefore the question for me is, in terms of implementation measures, what are the critical components which at a higher level create what we call an investment scheme in the game? Because I think the biggest challenge that this is going to face is that some African countries, if they feel excluded, will say, you know what, I don't have to change what I've been doing. I'll continue to buy illustratively, let's say, from China, because I can buy from you, but it's going to be more expensive and I've got nothing to gain because I'm not selling to you. Now, this is where I think the big economies on the African continent need to really understand their responsibility in creating the opportunity which is inclusive for everybody. I like illustration. So I'm going to use a fantastic illustration which we've got right in front of us, the Airbus project in Europe. Why did the Airbus project succeed? The Airbus project started in the early 70s. I'm sure that both of you have been on an Airbus sometime in the last, when you could still travel before COVID. The reason why the Airbus succeeded in competition with Boeing, it's because the big economies in Europe, i.e. the British, the German, and the French economies, to just name those three, although they had national capacity to make the Airbus project a national project, they didn't do that. They made it a pan-European project by distributing the manufacture of components of the Airbus to as many European countries as possible, so that the European countries that manufactured the components of the Airbus created jobs in their own countries. And therefore, in order to gain sustainability, a virtuous circle had to be created. If jobs had to be sustained, the final product had to be bought by somebody. Who do you think bought the final product? The same people who were manufacturing the components saw virtue in buying the final product. So the European airlines, if you observe, from the time they started manufacturing the Airbus, they bought less Boeing and started buying more Airbus in order to sustain the job creation that had happened. What am I getting at? So if countries like Nigeria, South Africa, Kenya, Egypt, and the like, both Pan-African basis and sub-regionally, think that this opportunity is for them to just sell to other countries, then they will have missed an opportunity. The opportunity here is for these big economies to facilitate the creation of manufacturing capacity in the less industrialized countries so that there is an opportunity for value exchange, for real value exchange. So if South Africa, for instance, promotes manufacturing in Mozambique, again, I like illustrations, it means Mozambique all of a sudden is going to be capacity to sell to South Africa as well as buy from South Africa. If South Africa thinks they can just sell to Mozambique and Mozambique has got nothing to sell to South Africa, tell me what is the difference or what's the benefit in Mozambique buying from South Africa as opposed to buying from China? So skin in the game is the biggest challenge that we have in the architecture of the ACFTA. If we get that right, then we'll create the resources to enhance the inclusivity that you're talking about, whether it's on a gender basis or age basis, whatever the case may be. But we need to pay particular attention to the architecture of the production side of the ACFTA.
Thank you very much for that, Nkosan. And actually, my point was exactly this, how you can use the AFCFTA to ensure that there is inclusivity, that there's greater equality on the continent, not so much as a normative aspiration in its own right, not so much that you need the AFCFTA for inclusivity, but I'm glad you cleared up that point. Hannah, your own thoughts on this?
Yeah, and I guess my actually point is slightly different in terms of more from a kind of who is participating in trade. And I think we know that, of course, on the African continent, majority of businesses are women owned. There is talk of a women's protocol now with regards to the AFCFTA, taking that into account, and especially small and medium enterprises. You know, women are at the center of that economy, and especially the informal economy. Now, it's not a case necessarily of saying, well, we need to get rid of the informal economy. That's not necessary at this stage of our development. It's more a case of how do we leverage the economy? How do we, in the informal economy, how do we leverage the role of women in trade in order to and ensure that the benefits of trade are also going to them as well as others. So I think that is plausible. I think if there is a women's protocol, if there is a stronger emphasis on incorporating small and medium enterprises, making sure benefits go to small and medium enterprises, you almost automatically be targeting women. If we make sure that competition policy, for instance, does not crowd out the informal economy, that's also going to be really useful. And so, yeah, we can find ways, I think, of making sure that in the design of the AFCFTA that it will be helpful in terms of inclusivity. I think it's possible still.
Yes, of course. And I think this is a very important point. Of course, one of the reasons why you have the informal economy is that trade costs are high, relatively high, and people respond in ways in which they can engage in trade at a much lower level of productivity and engagement and so on. And one of the objectives, of course, is to bring trade costs down in order that you could incorporate people into the formal economy. But yes, indeed, I get your point that the AFCFTA needs to respond to these sorts of issues.
E-commerce as well as an important entry point there as well. And again, looking at China, there's some really interesting lessons there, because e-commerce was used as a means to encourage sellers to engage. And sellers who were previously rural, sellers who were previously in the informal economy, classified in the informal economy, they then were engaged in the e-commerce platforms, and they started to trade more. And again, that's something which and in terms of the studies which have been done on the impact that had, you found that it was majority women who engaged. So again, there's possibilities of using a number of these different tools that we have and the protocols that we have in negotiation and in implementation to really focus on ensure inclusivity.
Yeah, no, thanks for that. I would like to come back to an issue that you've already raised, and to turn to Nkosana for his thoughts on this, and that is the the question of sustainable infrastructure, sustainable logistics, and so on. That these are all, of course, important enablers for the AFCFTA and for trade in general. And we all know that there's a huge deficit on the continent. But again, your thoughts on this question, Nkosana. What do you think needs to be done, in order to overcome this deficit?
Okay, again, we can't get away from the mindset shift issue. So let's look at a few illustrative past examples. Most African countries used to think that governments had to own telecommunications, for instance. And when that was the case, there was a huge bottleneck in terms of resource mobilization to be able to roll out a sensible coverage and therefore create accessibility to the infrastructure for telecommunications. When that changed, because this issue of control, i.e., it's a security risk because of communication and so on, when that shifted and the private sector was allowed to come in, telecoms exploded through the cell phone, as we all know now. Penetration levels reached global levels virtually in terms of communications. I think a lot of our issues are mind issues. It's a wrong perception of what we need to own and control. The minute you allow the private sector, who have actually got the capital to come in, most instances on the African continent, it's not, when you do the analysis, what holds us back, it's not cost. What holds us back is access or availability. And in many instances, actually, we end up paying more for the poorer, pay more to access these resources than the rich countries, which is an oxymoron, if you ask me. We've got it all. So what do we need to do? We need to relax. Relax and stop the madness about wanting to own everything. You don't have to own a road. You don't have to own rail. Let those with the money build them. And they are there. Relax and let people be provided with these services so they can access them. The rollout then gets done by the private sector. You create an environment. Yes, you create a framework of policy and regulation, and they let a toll system, for instance, come into play. You drive, you pay. You go on a train, you pay the appropriate fee. And the people who have got the capital, if they can get a sensible return on it, then they'll build the infrastructure. In the financing, one imaginative thing I personally would suggest, if I run a country, my approach would be the following. I'm not going to pay for the building of a road or rail, but what I will do is I'll provide a floor in terms of investment return. I'll guarantee a certain return to whoever deploys their capital in that sector. But in return, however, I'll also say above a certain return, we are going to share, because I won't allow them to exploit the population unreasonably. This is normal in all markets. So if I guarantee you a minimum return, I've earned the right to also limit your top level return by simply saying then, because of the cost I've incurred in ensuring you effectively, we are going to share the returns above a certain level. so that it goes back into the public purse. I think it's imagination, how to create the environment and not hold ourselves back by insisting on finding the capital that we don't have, and not those who've got the capital do the financing.
Sure.
So,
I think these are very deep thoughts on the political economy of the African state, and need to prioritize efficiency and deal with these issues relating to how capital is accumulated and so on. Hannah, your own thoughts on these aspects that are essential, the overcoming the infrastructure deficit and so on.
Yeah, I fully agree. We need to be more imaginative and creative. We have an infrastructure deficit. It is well known that a financing deficit for infrastructure. Yes, so far we have been, over the last few years at least, been trying to rely on more concessional loans to get there. I think we must continue to go with pushing our partners to support us with concessional loans. But at the same time, that creativity is plausible. I think we can look at a number of different models. What we need to be careful of, however, I think is, in the 80s, we went through structural adjustment where we had a lot of privatization of our enterprises and a lot of privatization of utilities, very basic utilities. And that did not go in poor people's favor in many cases. So we do need to while there are some essentials which can obviously, there are certain essentials which can, non-essentials which are fine for the private sector to really come into. They should be coming into more. I think there's a general problem with risk perception. African risk perception is far too high from the private sector. So we really need to work on kind of pushing those negative risk perceptions of African, in terms of African investment. But we also, where, for example, utilities are concerned, or things like rail, as long as the government is making sure that the private sector is setting the right optimal price, societal optimal price, for instance, on rail, which will enable consumers to actually use the rail, then there are so many different models that can be used. So we just have to get more complex in all of this. We're going to have more complex economies. The AFCFTA is part of that intensity in creating more complexity. We just have to jump in, really.
Yeah, sure, absolutely. And I know we're running out of time, but I think there's still time for one last round of questions and exchange on this. And I'd like to come back to an issue that Nkosana raised, and that's the role of dominant economies on the African continent. Again, a very important insight, as we have seen this elsewhere in Southeast Asia. We've seen the role of Japan, of China, and the effect that has had on other countries like Vietnam, Cambodia, and so on. So I think, again, a very strong insight here. Nkosana, you have vast experience of the African continent from a very long career. What do you see as the prospects for Nigeria, South Africa, Kenya, Egypt, Morocco stepping into this role that you mentioned?
Well, I think the prospects are good, but there are a few fundamentals which we need to change, and let's not restrict it to those big ones, because the things I'm going to touch on are actually pervasive on our continent side. And maybe let me take a step back and say, these conversations are often problematic for me because a lot of what needs to be said, strictly speaking, is inside conversations as opposed to outside conversations. If you get my drift. We ought to be sitting in a room amongst ourselves and looking at each other and saying, you know what, these are the things we need to change, without feeling that we need to be defensive because an outsider is listening in. Sadly, I'm going to have to treat what should be an inside conversation and expose it to the outside, because that's the world we live in now. There is transparency at all sorts of levels. What is holding us back? There are two primary things that I think the African continent needs to deal with. The first one, sadly, I think it's corruption. A lot of resources are wasted. We behave as if we don't have resources. Africa is over-endowed in comparison to many parts of the world with natural resources. And also, actually, interestingly, even with human capital, very bright people on this continent, but we educate them and then we lose them to the rest of the world because we have not created a conducive environment at home to accommodate these people. Doctors, financiers, you just look at what's going on outside there. They're all over the place. We are all over the place. The second one, which is related, is we don't have an appreciation of meritocracy. You know, when Nkosana becomes president of country whatever, he goes and gets his nephew, his son, his wife, his daughter to do jobs that they are not qualified to do. And as a result, our ability to transform our resources into all of these good things we've been talking about are totally undermined. So I think there are certain fundamentals that we need to confront, uncomfortable as they are, and realize that unless we get this corrected, we can say all we like as much as we like. And the world now actually is tend to becoming polite and politically correct. They are not going to look us in the face and tell us to change our ways. They'll just listen. They'll own us and give us places to sit at, World Bank, IMF, UN. What quality of people are we sending there? What quality of people are we deploying at home to manage our economies and do the thinking that is necessary for us to achieve the things that Anna has been saying, for instance? I think these are very uncomfortable conversations, which sadly, I have to say we need to confront. If we correct those two things, we'll go a long way to achieving most of our aspirations.
Yeah. No, I get the point. And Hannah, on the flying geese model, I think we've heard from Nkosana, very challenging, but sometimes these tough things need to be said. So your take on the flying geese?
So my take, first of all, is just on the kind of big economies, I think we overemphasize this competition. We really need to get out of this idea that we have a competition between the economies. This is not a zero-sum game. If we're getting to be the third largest economy in the world, this is not zero-sum. We all have to work really hard, and we're all going to win, but we all have to work really hard in doing so, right? Number one. Second of all, I think the other very uncomfortable conversation has to be with our development partners, and we have to ask the difficult, to say the difficult things too. I think a lot of the time when development partners are working with us, they're saying, you need to change for us. You need to do X, Y, and Z. You need to get rid of corruption. You need to get rid of all of these, challenges at the border, et cetera, et cetera. Yes, but in order for them to really support us and work in partnership and real partnership, where you've got serious, equal respect from both sides, we need, for example, on their sides, things like red tape to also be reduced. We have these things, for agricultural products, for example, we've got phytosanitary arrangements, very, very stringent and different in different economies. Why is that? These sorts of issues, we need to be very tough with our development, start to be very tough with our development partners on, and say, well, we need more access to your markets. More access to your markets will also help to grow our markets too. So if you're really in this with us, you need to open up your markets in a stronger way, and especially to our added value products, because that will provide more incentives for us to grow our markets too, not just to be continuing to export all our raw materials to you, or our agricultural products in unprocessed forms to you. We can do that with China equally. Yeah.
Yes,
go ahead.
Yeah. Develop on Hannah's point. Let's go back to when I'm running a country, my responsibility first and foremost is to my country and my citizens. We used to get annoyed with what Trump said, but Trump actually was just maybe crude in saying the truth. The truth is, as long as there is something called a nation state, The architecture of nation states says the citizens of country X are going to hold their own politicians who they elect to account for the welfare of the citizens of that country, not the country next door. Which means, therefore, if you don't deploy your best talent at that top level, the capacity to negotiate, as you're saying, and you're right, it's a negotiated process. But what is a negotiated process? It means you have to pit your best brains to be able to sit in a contestation, not aggressively at war, but it's a contestation nevertheless. I always tell people that if you want to understand these things, we were listening to the World Trade Organization, former trade organization official here. If you watch Europe and the US, the same people, because as you know, people running the US came from Europe. These are the same people. But the number of times they go to court on trade issues just needs to help Africa understand it's a contestation. And you have to pick your best brains rather than saying, you must like me. No, it's not about you liking me. It's about, can we negotiate in contestation and come up with a win-win situation? Put your best brains forward and you'll achieve that.
It's a mindset of confidence. It's a mindset of confidence. We must have that confidence.
Both competence and confidence, but we need competence. Let's not put the wrong people in these places who don't know where to start.
Yeah. Well, thank you very much. I think our time is up, but it's going to be impossible to summarize everything. But just to say that, suddenly I think there have been some very powerful insights on the AFCFTA and the role that it can play as a game changer in Africa. I think Hannah reminded us about that economic development is the prize, and to keep our eyes on that prize. Nkosana, you reminded us, among other things, about the important role of investment. We touched on the issues of sustainability in this era of green growth. We looked at inclusion, the informal sector. And also, we've looked at various aspects of the political economy of the African state. But the overriding message I'm getting from you is that agency is the driver of reform, and African agency can bring about reform. So I'm getting quite an optimistic perspective on the future, that African agency can indeed take the continent where we want it to go, to realize those things that were in the letter to Kwame Nkrumah that Hannah also reminded us about. So, well, thank you so very much for this conversation, which is part of the LSE Firoz Lalji Institute for Africa-China conference. And over to you again, Shirley. Thanks again to the panel. Thank you.
Oh, thank you so much, Hannah, Nosana, and our own David. It's truly inspirational. I'm seeing from our social media tweets, people are saying very inspiring and informative, the best that we could hope for. So thank you so much, ladies and gentlemen, for your generous sharing. And with that, I would love to just remind our social media audience that we have a huge luncheon panel coming up, highlighting several very important thought leaders on the African continent, in addition to what we have on our panel so far this morning already. So please tune in at 12:30. We'll be kicking off with our special luncheon program on envisioning Africa's trade and investment. And in between the sessions, please stay on with us. We will be live streaming some of our key remarks and special messages from global leaders who have not had the experience to join us live today, but their remarks have been sent in previously and really truly inspirational. So we welcome you to continue to stay on with us throughout the day, and we will be live streaming next Ambassador Alan Wolf's special remarks on the culmination of the AFCFTA. We'll see you soon at 12:30 London time. Thank you. Bye-bye.
Thanks. Yeah. Bye.
Thank you so much, Shirley.
Yeah, thanks.
Thank
Okay.
you.
Bye,
Thank you,
everyone.
David.
Bye.
Thanks.
Yeah,
Bye.
yeah. Thanks, Nkosana and Naina. Bye.
I first came to Africa, it was to Abidjan in the Ivory Coast, just over 50 years ago. It was to participate on behalf of the US Treasury in the drafting of the Articles of Agreement of the African Development Fund. My most recent trip to Africa was to Addis Ababa in late February of last year, just before the pandemic curtailed travel. I'd gone to Ethiopia to meet with representatives of 9 African countries seeking entry into the WTO, the World Trade Organization, as well as with Ethiopian officials about their own country's application. These 2 visits are the African bookends of my career in public service. Well, not quite. On a brisk, clear morning, a week later, on March 1 of this year, in my last official act as co-acting Director General of the WTO, I stood on the front steps of the WTO to welcome its first African Director General and first woman in that position, Dr. Ngozi Okonjo-Iweala. It was a day full of promise for Africa and for the WTO. My purpose in talking with you today is to put the Pan-African Agreement in the context of the global trading system, a system embodied in the World Trade Organization, and the great possibilities that exist for both the African Continental Free Trade Agreement and the WTO. The AFCFTA should be transformative. It is a blueprint for the freer movement of goods, services, and people across Africa for the benefit of all. According to the World Bank estimates, the Pan-Continental Agreement could lift 30 million people out of extreme poverty. As the largest free trade area in terms of number of participating countries, the FTA can provide the economies of scale needed to attract investments in higher value-added production, generate innovation-driven growth and entrepreneurship through linking the markets in Africa. While concentrating on African regional growth should be a top priority for Africa, it should never be forgotten that most of the world's markets lie outside of Africa. Africa accounts for 20% of the world's population, but only 3% of global GDP. Even with African growth above the world average, a 2-track model is needed, substantially improving intra-African trade while deepening engagement with the rest of the world. What is required is not only an increase in cross-border trade in Africa in agriculture and raw materials, but also in industrial products and services. Africa must also accelerate deeper involvement in global value chains, as Southeast Asia has done so successfully. Regional integration is not a substitute for global engagement. The 2 are complementary. Regional and multilateral integration through membership in the AFCFTA and the WTO can knit together an African continent that can help unify and amplify Africa's voice on the global stage in pursuit of sustainable peace and development. Economic connectivity can bring inclusive and sustainable peace, political stability, and higher standards of living. One important means to enhance the prospects of success in the regional integration agenda is participation and engagement with the WTO. 9 African countries, Algeria, Comoros, Equatorial Guinea, Ethiopia, Libya, Sao Tome and Principe, Somalia, South Sudan, and Sudan are in the process of acceding to the WTO to join the 44 African countries that are already members. WTO accession represents a tool to strengthen the rule of law, ensure policy predictability and transparency, and promote international trade cooperation. It emphasizes the presence of necessary frameworks and practices that are required to create an environment that fosters economic development and attracts foreign investment. The WTO accession process and membership help these nations acquire and strengthen the structures that they need to take full advantage of the benefits that can be derived from the AFCFTA. The WTO Secretariat and its members of the WTO can offer crucial support through technical assistance and policy advice as governments undertake implementation of the Regional Free Trade Agreement. Two areas which come to mind for immediate practical assistance. First, the Secretariat can help with technical work of implementing the agreement, the scheduling, certification, and verification of the provisional tariff concessions. Second, the WTO can facilitate discussions on difficult issues involved in integration, such as rules of origin, resolving the complexities of moving goods across borders, making it easier for goods originated in Africa to obtain duty-free treatment in participating African countries is essential to obtaining the full positive benefits of the agreement. The Chief of Staff of the Secretary General of the AFCFTA Secretariat, Mr. Silva Ojoko, has called on governments and businesses from party states to prioritize what he describes as low-hanging fruit, particularly agricultural trade. This is an area where the WTO can be particularly helpful. Tariffs can slow trade, and it's an object of the AFCFTA to eliminate them as a meaningful barrier. But more insidious, less transparent, are non-tariff barriers, particularly in the form of standards. Failure to meet a standard can halt trade in a product entirely. More often, sanitary and phytosanitary standards, called SPS, increase trade costs, and this can be of critical importance. Standards are crucial to agricultural value chains and to improving competitiveness and the quality of made-in-Africa goods and services. Reducing these barriers can especially benefit small and medium-sized enterprises, SMEs, which will be particularly helpful to women. The WTO Standards and Trade Development Facility, it's called STDF, funnels assistance for promoting compliance with standards and conformity assessment procedures in developing countries for agricultural products, and essential for moving food across borders. An example where standards will be particularly important, however, is not just agriculture, but with respect to the development of solar energy, which is key to African development. There's an opportunity for Africa to lead the world in regional harmonization of standards for solar energy products. The new frontier of standards is moving towards climate-related standards. The WTO should either broaden the scope of the existing STDF or create a new facility to address industrial quality infrastructure needs. The WTO is a forum where all economies have a role to play, no matter what their stage of development. During my recent service as Deputy Director General of the WTO, I chaired the Director General's Consultative Forum on Cotton Development Assistance. The moving force behind the initiative were four of the poorest WTO members: West African countries, Benin, Chad, Mali, and Burkina Faso. The basis for making the forum work, for delivering benefits to these countries, was their pragmatic approach, the four countries' pragmatic approach to identifying their needs with specificity. Pragmatism, as opposed to demands for the fulfillment of rights not universally acknowledged, is a way to achieve greater responsiveness of the international community, as well as a contribution to the working of the global trading system. It's widely acknowledged that increased resources are needed to boost the African continent's physical infrastructure. Physical infrastructure, however, is not the only impediment to continental integration. African governments should consider introducing simplified customs clearance at the borders to streamline the movement of goods. In this regard, the WTO's Trade Facilitation Agreement and Trust Fund are directly relevant. The importance of cutting red tape, creating greater efficiency and transparency, cannot be overstated, especially for landlocked countries. In meeting the trade challenges of the 21st century, the rapid rise of e-commerce in Africa is particularly important and has been brought to the forefront by the AFCFTA negotiations. Africa can be a pathfinder for pointing out where global rules for e-commerce need to be established through WTO negotiations. It should do so, both within the AFCFTA and within the WTO. It should be a leader. The WTO can also play a constructive role in facilitating the restoration of trade finance. The COVID-19 pandemic has exacerbated the pre-existing state of diminished availability of trade finance. A widening gap amounting to $1.5 trillion worldwide has frustrated developing countries' participation in international trade, impeding the ability of international trade to support post-COVID economic recovery and the ability of small businesses to capitalize on be included in the benefits of free trade. In the aftermath of the financial crisis just over a decade ago, the WTO brought together major international financial institutions, banks, private sector actors to address this need of trade finance. It can do so again with a focus on mobilizing financing for MSMEs, the micro and medium small enterprises, and leveraging big data and artificial intelligence to counter the trade finance rollback. Additional financial resources more broadly are needed to enhance the effectiveness of the AFCFTA during this time of global crisis. One possible approach would be a partnership between the WTO, the World Bank, the IMF, the African Development Fund, and the Asian Infrastructure Investment Bank to create a Pan-African Fund for Trade, an AFT, a Pan-African Fund for Trade, dedicated to the economic integration of the African continent. AFCFTA members of the WTO can make the multilateral trading system have a fresh outlook for a positive future through trade. The secretariats of the WTO, the African Union, the United Nations Economic Commission for Africa, and AFCFTA should collaborate to make the most of their synergies between the Continental Agreement and the acquis of the multilateral trading system. My hope is that the voice of Africa will be strong and positive in the WTO, leading on issues that should be of common continent-wide interest, such as the adoption of a ban on export restrictions when it comes to purchases by the World Food Program, WFP. There's no reason why this can't be accomplished. It should be accomplished with African leadership. Africa's narrative is changing, and the continent should seize the opportunities presented by the AFCFTA to liberalize trade and investment and introduce the necessary reforms that would make Africa an even more attractive investment destination for both domestic and foreign investors. Proper and effective implementation of the AFCFTA is key to realizing its full potential as an instrument to achieving robust economic growth and sustainable development of the continent. African policymakers should harness the synergies between the WTO and the AFCFTA to achieve this laudable objective. They should call upon the WTO members to constitute a working party, backed by a cross-divisional secretariat task force to help assure that the resources of the WTO are fully mobilized to help assure that the AFCFTA fulfills its bright promise. I thank you very much. I wish you well in this conference. I'm sorry I can't be with you in person.
Hello. We have come together to assert our role in the direction of world affairs and to discharge our duty to the great continent. Africa is today at mid-course in transition from the Africa of yesterday to the Africa of tomorrow. That statement was made in 1963 during the first meeting of the Organization of Africa Unity, OAU. We are at a similar inflection point with the COVID moment. Africa can approach the pandemic as an opportunity to achieve robust and sustainable recovery. It can use the moment to recalibrate and harness its external relationships towards unleashing the latent capacity of the continent. Africa is the next big growth market with a population of 1.2 billion people, most of whom are young, increasingly better educated, and quite entrepreneurial. It is also the new frontier for trade and investment. And as those who have invested in Africa know, returns on investment are some of the highest in the world. The Africa-China relationship has been Africa's largest trading partner. China is also the single largest player in Africa infrastructure. It projects and builds 1 in 3 of them. This has begun to remove one of the most critical constraints to development in the continent, that is infrastructure. How can this supersized partnership be leveraged to unleash Africa's growth potential? We propose that the role of China in Africa's transformation could become even more consequential if China made 4 strategic shifts. 1, a shift in its development strategy. 2, an improvement in the quality of its cooperation. 3, expansion in scope of its development program. And 4, a recalibration of its framework of cooperation. China needs to make strategic shifts in its development strategy in order to align it to the key trends that are driving transformation in Africa. They are its young population, urbanization, industrialization, infrastructure development, and the untapped resource wealth of the continent, as well as the innovative application of digital and mobile technology. We'll not discuss infrastructure because that has China has already done a very good job on that. Let's take the others in turn. Africa is both the youngest and the fastest growing continent. Roughly 60% of the population is under the age of 25. By 2050, 1 in 4 people in the world will live in Africa. How do we unleash the tremendous potential of this demographic? The obvious starting point is to improve the human development and human capabilities of this population through education, training, skill development, as well as strengthen connections to finance and markets. When you look at the China training program in Africa, which is currently the largest, with over 100,000 people trained every 3 years, it is completely misaligned to the basic human development needs of the continent. We therefore propose that China could usefully align its support for training and skill development in Africa in 3 ways. The first is basically to align it to basically strengthening human development through education and training along the lines mentioned a minute ago. The second is skill development and training to enable Africans to maintain the huge infrastructure that China has helped to build, bridges, ports, roads, to ensure that they are the engineers and the service people to ensure that that infrastructure becomes sustainable and productive. And the third one is to share lessons of experience, particularly on poverty alleviation, where China has done a tremendous job. Between 2015 and 2045, the urban population in Africa will grow by an average of 24 million per year. Globally, more than 80% of GDP is generated in towns and cities for the obvious reason of agglomeration, where money, capital, and people are concentrated in small spaces. But for towns and cities in Africa to realize the productive benefits of urbanization, we need to urgently meet the needs of affordable housing, well-connected transport systems, and basic services, as well as jobs. China could usefully make a strategic shift to apply the same approach it has applied on infrastructure to meet the housing and basic services needs of our towns and cities. Africa has 60% of the world's underdeveloped arable land and huge untapped resources, mineral resources. But currently, Africa is not providing either the revenues or the jobs that could accrue from its extractive industry. And we therefore propose that a strategic shift is required in the way China approaches the extractive industry in Kenya, so that it imports finished products, not just raw materials. And we have seen how Botswana built its wealth around exporting refined diamonds. I would like to propose that this is one of the most important contributions China could make to Africa by getting the natural resources refined in Africa, processed in Africa, and then Africa exporting finished products. China also needs to align its partnership so that it can become an even more powerful force of growth and transformation. And could do this in several ways. The first is basically putting African leaders at the driver's seat and allowing African leaders to define and lead the development program. As far back as the inauguration of what is now the African Union, our leaders then said, we have the resources, but we have failed to make full use of our power in the independence to mobilize our resources for the most effective takeoff of social development. And they basically went on to talk about needing to control the means of production and to control their finances. We are at a similar point now. Africa can no longer continue being just a recipient of development aid. They need to shape that aid. They need to shape the investments. And as we saw during COVID, African leaders became quite effective at coordinating to shape their destinies. The African Medical Supplies Platform, for example, very quickly organized a platform for supply COVID-related materials, and in a similar way, we have seen the engagement of the Commission, Economic Commission for Africa, how they have engaged the rest of the world on financing for COVID and debt management. At the bilateral level, we have begun to see a few countries have rebalanced the relationship with China, where they insist that if the infrastructure is built, they also need to see training developed, so that in Ethiopia, for example, we need to see more of that, where Africans are driving the program and the nature of the program in a much more equitable manner. Concerns that have been expressed about the trade relationship with Africa, between China and Africa, is that it is deeply asymmetrical. China is seen to benefit more from the relationship than its Africa counterparts. There's a huge deficit amounting to over $20 billion, for example. Africa imports expensive finished goods from China while exporting cheaper raw materials. And Africa farms face significant entry barriers to China's value-added product market. This asymmetry is not good for maximization of such a strategic relationship. And what we propose is that there needs to be a major rethink of the quality of Africa-China trade in particular, to make it much more reciprocal and less asymmetrical. China could harness new growth opportunities in Africa over and above the existing program. The most promising one is supporting the acceleration of the digital economy in Africa. The digital economy stimulates business vitality, shapes lifestyles, changes consumption habits, and as we noticed during COVID, it basically helped to maintain systems running in a way that would not have been possible in the past. Chinese companies, in an ironical way, have secured a huge share of the digital market in Africa. For example, Huawei equipment constitutes 70% of the 4G infrastructure in Africa, and it was the first in the continent to offer 5G services. Tech companies such as ZTE, CloudWalk, and so on have secured government contracts to build smart cities, data centers, e-governance platforms, surveillance systems, and so on. Again, Huawei alone is involved in 25 data center and e-governance projects across Africa. There is a contradiction here between the needs of accelerating digital development in Africa and importing wholesale Chinese technology. And the strategic shift we propose is for Chinese enterprises to support digital development in Africa rather than simply transferring their technology wholesale. In fact, investment should focus on supporting the development of a robust technology ecosystem that includes the infrastructure, digital business, digital skills and values, and so on. And it's a huge opportunity for investment. This will spur digital trade that will help transform the transformation of industrial supply and value chains. It will also enable digital acceleration in key sectors such as education and health, retail, and finance. The other new area that we propose that China could expand its programs into is supporting Africa indigenize its manufacturing capacity. During COVID, African manufacturers have demonstrated the capability and innovative capacity to produce essential medical supplies. There's scope now to increase local manufacturing capacity in areas such as pharmaceuticals and agro-processing. This is a tremendous opportunity to unleash growth and development. For every dollar of manufactured product, Africa imports approximately 40 cents in input from outside the continent. If local production, local manufacturing was strengthened, you could unleash billions and billions of dollars to the continent's manufacturing output. So what we are seeking here is for China not just to be a factory for Africa in China, but to help Africa become a manufacturing hub driven by its own felt needs. The third area that we propose where a shift is required is basically pushing China beyond its comfort zone, beyond the scope of its current strategic development agenda for Africa. And we just propose three areas. The first one is debt. And this is topical, is sensitive, but we cannot hope to unleash growth and development in Africa at this point unless we squarely confront the issue of debt. China is Africa's largest bilateral creditor. It holds at least 21% of total Africa debt, and payments to China account for nearly 30% of the 2021 debt service. That's a huge outlay. And we're proposing, as one civil society organization said, let's throw out the rule book and revisit this issue in a manner that enables Africa to sort of shake off the shackles of debt through debt forgiveness as possible, debt reprofiling, debt restructuring. Also, we are proposing that there is scope to explore alternative cooperation strategies in finance, such as joint ventures, mergers, acquisitions, and PPPs. Essentially, a starting point has to be how do we reduce the dead weight of debt on Africa growth and recovery. The second one is supporting Africa on peacekeeping efforts. Africa is doing a lot to try and silence the guns with qualified success. And we are proposing that China could usefully scale up its support for peacekeeping efforts, including increased UN-assessed contributions to ensure sustainable and predictable financing for AU peace support operations, because you cannot have development without peace. The third area where we are proposing China moves slightly beyond its comfort zone is supporting Africa on climate change. Africa is doing a lot on climate action, but it needs financing. And Chinese investments could help African countries grow green economies to achieve low carbon and climate resilient outcomes, focusing on food security, clean energy, green and resilient cities, environmental stability, and so on and so forth. China could also discuss with Africa countries innovative financing mechanisms that are currently being discussed by various nations, including debt for climate swaps, to provide space for economic recovery and climate adaptation. Finally, we propose that China could usefully adjust its framework of cooperation. At the moment, China has developed a very effective mechanism for engaging the Africa continent through FOCAC. 46 African countries have already signed to the Belt and Road Initiative. So there is sort of a continental approach from the China side towards Africa development. But we don't have a parallel structure for engaging African countries. At the moment, the engagement is primarily bilateral, even when decisions are made at the FOCAC level. We therefore propose that as a final strategic shift, China could usefully be proactive in supporting the actualization of the Africa Continental Free Trade area, and use that as a regional platform to engage the continent in a more strategic and holistic manner, even as bilateral engagements obviously remain in place. So China could support accelerated integration of Africa, support regional economic integration, facilitate inter-Africa trade and investment, and promote the connectivity of cross-regional infrastructure. These proposals will realize the promise of Africa and help release development potential of the 1.2 billion people who have a combined GDP of more than 3.4 trillion, which then makes it the 5th largest economy in the world. Everybody benefits from making these strategic investments, both our external partners, in this case China, as well as obviously the Africa continent. Thank you.
Mr. Jing Donghua, Vice President and Treasurer of the World Bank, for a special fireside chat on Africa's future in global development. Jingdong, you're a Chinese, I hope you don't mind me mentioning, who has been brought to the center of the global multilateral platform, but also your career happened to start with the African Development Bank. So what have you seen over the past decades through your multilateral career about the transformation in Africa?
Professor Yu, thank you so much for the invitation, and I'm honored to join you to share some of the work that we do, both in China, but also in Africa, and share some of my perspective. Indeed, I happen to have some say in a topic like China and Africa because, the first almost 30 years of my life I spent in China, my childhood, my formative years. But then I started my international career in Africa, lived there for 3.5 years. And then later when I joined the IC, I certainly visited Africa more than any other continent. So it's a continent where I have a lot of affinity and passion about. Now, just very broadly speaking, first of all, as the World Bank just celebrated 40 years of relationship with China, we certainly can say that China has been an outstanding success when it comes to development. From the time that China opened up in 1978, China has had a tremendous achievement, and in that journey, the World Bank is very happy to be a very supportive partner. I just got this information. I just wanted to mention that we, in the last 40 years, we have invested in over 430 projects in China with a total amount of $64 billion. And certainly witnessing and supporting China's development plan. So from a poor country to a higher middle income country and continue to grow, it's certainly a model where we can draw a lot of lessons, including for Africa. Now, when it comes to Africa, the way I look at it is that I can tell you about, from two sides. One is anecdotal. The other is what we can see from the World Bank side. Anecdotally, I worked in Africa in the early 1990s. And at that time, China was still in the early journey of development. And Africa was actually trying to go beyond civil conflict. As a matter of fact, when I was living in Africa, many countries were in civil conflict or regional war. I can mention, I lived in Abidjan. This was 1993 and 1994, all the way till 1997. You have wars in Liberia, Rwanda, and in Burundi. So if you put, the development journey in that context, Africa had only started to focus on development at a later stage than China, right? But I'm happy to see that in the last decade, Africa continent, if you look at sub-Saharan Africa, which has 48 countries, the vast majority of countries have been making progress. They are peaceful. They have turned their attention to development, right? But of course, it's 48 very different countries with their own culture, history, so on and so forth. So I think it's a journey that we are traveling. But here, let me also institutional, that is, what are the successful factors that China did that could be of relevance to Africa, right? So let me quickly mention 4 areas, and maybe we can expand a little further in later Q&As. But the first is that decision to open the country up to trade, to take advantage of the vast pool of labor, right? To do manufacturing, to export, to earn foreign exchange, and then turn it into resources to finance China's development, right? So that is something that China did very well. Africa, recently has launched a continental free trade agreement, which means that within Africa region, trade will be much easier to be facilitated. I think that's actually a great momentum, and certainly the World Bank and many other international organizations are helping. But that is that leads to a second issue, that is infrastructure, right? Including, roads, transport, ports, telecommunications, so on and so forth. The fact that for a long time, it is cheaper to ship something from Shanghai to Mombasa, which is a port city of Kenya, then it is then take that container from Mombasa to an inland country like Rwanda and Burundi. That really speaks volume about the urgent need for Africa itself to build infrastructure so that the trade can be facilitated, right? Now, what is the difficulty? A lot of people, when I mention the following, really don't get the concept. I said, the map doesn't do Africa justice, right? Because it's a northern perspective of the world. The actual size of the Africa continent. How big is it? Well, I tell people, if you drop the United States into Africa, you drop Canada into Africa, then you drop into China into Africa, Africa continent is still bigger than the three countries added together. So you could appreciate the vast landscape and the expense and, to build infrastructure. But nevertheless, that said, it is a big priority, right? For Africa to take advantage of the natural resources, its labor force for manufacturing, so on and so forth. So this is the second. The third, I think China did very well, and I was a beneficiary, is that China focused a lot on basic education, basic healthcare, right? So when I was growing up, education is very much emphasized because that's actually a foundational piece in terms of giving people the knowledge, giving people the skills to participate in a productive, development, and therefore the World Bank actually spends a lot of its partnership with Africa on education, healthcare, so on and so forth. The last thing I wanted to mention is financial market. That is, for development to happen, you really need the financing. And all of the international development assistance, whether it's from the World Bank, African Bank, from AIIB, added together is a very tiny part that is needed, right? In the case of China, China eventually developed the second largest financial market in the world after the United States, right? So China's bond market is now $15 trillion. China's equity market is 10 trillion, right? So when you develop a vibrant financial market, you then have an efficient way to recycle your domestic savings and grow that domestic saving as a primary source of development financing. So these are the four elements I like to mention. But let me just say, in concluding this first question, is that when I was in Africa about 30 years ago, you travel around in Africa, when you go through an airport, sometimes you run into difficulty, right? Whether it's immigration, customs, or even the basic infrastructure of the airport itself. But now you travel to Africa, you go through, immigration, or the border through a very well, nicely built airport. It's not different than going through other airports. It is one sign that Africa is progressing as the rest of the world is. So let me just stop there, and I'm happy to answer more questions.
It's no doubt that if we just open up the IMF statement, economies, such as Rwanda. So what are some of the other exciting things that are happening in that particular region that you think that
some of the infrastructure needs? But before we talk about that, let's say and it really highlighted some of the challenges of basic infrastructure. For example, in the United States, in Europe, where you live, even if kids have to stay home, they do have broadband so that they can still, be able to log on to go to school. But where in Africa and many other developing countries, kids just are left at home and they have no access to education capability. So how do you make sure you have Wi-Fi, you have cellular technology, you have telecommunication infrastructure so that people can benefit from the ability, even under challenging situations, they can still function as a society. This actually gives us new hope that we can address this right now. But that said, so our immediate focus right now in the World Bank and broader global development community is how to help Africa to rebuild Africa post-COVID-19, addressing healthcare needs, addressing education, nutrition, women's health, reproductive health, a lot of things that is immediate. And then, of course, climate change, infrastructure, and many other things, private entrepreneurship, so on and so forth. But let me mention two things that I think are exciting. You're absolutely correct. Africa still has some of the poorest countries in the world due to very unfortunate internal civil conflict, wars, terrorism, lack of funding, so on and so forth. But you also mentioned some great successes in terms of including Rwanda, from countries that suffer genocide to one of the most vibrant economies in Africa. So in that aspect, Rwanda actually has a parliament that is more than half of their parliamentarians are women. They program in social development, right? Making sure every citizen, including women, are full participants in decision-making, in national policy formulation, and in being productive, entrepreneurs, workers in the society, right? But equally importantly, that, when I mentioned the first bonds, savings bonds, that was sold through a cell phone is actually in Kenya. It is because Kenya over a decade ago, somehow enabled a cell phone-based financial inclusion strategy. Therefore, every citizen in Kenya was able to access financial services. So therefore, before M-Pesa, which is the name of the Kenya, fintech or fintech platform, only about 10% of Kenyans have access to finance. Now it's over 90%. And they have made tremendous progress. So these are exciting role modeling for other African countries, right? Because, when you talk about motivation, China, Korea, they are too far, or Singapore. But if you say my neighboring country, wow, if Kenyans can have access to finance, take advantage of leapfrogging using technology, if I'm another country in Africa, they will be motivated to do more. So we as a World Bank, we very much are working with them.
With a Nobel economist, Mike Spence. So Mike said, post the COVID-19, going back to your question, Jingde, that Africa almost certainly have to resort to a heavy investment-led economic growth model. So countries either have to borrow or suffer a lot. But if countries do borrow a lot, from the World Bank's perspective and from your personal experience, how do African countries ensure that economic sustainability and the fiscal resilience?
Shirley, that's a great question. So the way development finance has evolved, maybe we need to take a step back, right? So in the, just post World War II, I think at that time, it was simple. If you give money to build roads, bridges, factories, good things will happen, right? From that very simple concept of development to now a human-centric, sustainable development at the center of the development agenda, it's a tremendous evolution, right? So the way we work with African continent is that we actually, every couple of years, we sit down with the government. We figure out jointly what is the best strategy and what, depending on the country's background, its natural endowment of resources, and its current situation. So we have what we call a very comprehensive country partnership strategy. Okay? So it's a partnership. It's not a relationship of we tell you what to do, right? Because we already have 7 decades of development experience. We don't have to reinvent the wheel. We learn from successes, we learn from mistakes, and we share with the country those development experiences. Then, based on the country's specific experiences, let's figure out, okay, the World Bank, what is the angle we can better help you? What are the things that you can work with other partners, so on and so forth. So first of all, the development plan is country-driven. Second is indeed debt sustainability is critically important, right? Because you don't want a situation where you pile up foreign debt where the country cannot absorb, but then later became a burden on the country. So therefore, I think the World Bank actually raised this issue 2 years ago and was then certainly endorsed by the G20 in terms of, and this is because of the urgent situation under COVID, right? That how do we then fundamentally resolve that sustainability issue? However, that is not all bad, right? Because when you are developing in the process of development, you need financing. You need, especially when your domestic financial resources not sufficient. You need investment from other countries, of course, naturally in foreign currencies to come in. Our job is really to make sure, on one hand, are those projects tangible? Would they produce a positive economic financial results, but equally important, positive impact on society, on the country, right? So that sustainability goes into our analytical framework in working with the country. But of course, we have to address the legacy issues that those debt already accumulated, unfortunately, because of factors not caused by the countries themselves. For example, commodity super cycle, where a country relies on commodity export to have a steady revenue. All of a sudden, commodity prices collapsed and they lost an important source of revenue. And therefore they fell into a debt liability issue. So we have to address the outstanding debt sustainability issue, but equally or even more importantly, going forward, we have to make sure that when we design financing, how do we make sure going forward, the country will not fall back into indebtedness that would not sustain a positive outcome?
Well, the World Bank has been a leading example in delivering development sustainable goals in Africa, as well as other countries in the world. But today, I must say, though, Jingzhou, the World Bank is no longer the only one that are talking about partnerships, especially financing partnerships with Africa. So since 2013, we have seen a wave of multilateral institutions that are developed out of China. You have just mentioned about the AIIB and the New Development Bank, who are going to be at our conference joining you as well, but also Chinese development banks as well. Post the COVID-19, China single-handedly held 20% of Africa's total debt. And so will that percentage, you think, continue to grow out of China's balance sheet? And do they come into competition in Africa with the Bretton Woods institutions such as yours?
Well, Shirley, I had been very fortunate myself. I work in 5 different international multilateral development institutions. So certainly I'm thrilled to see more institutions are created to address the critical needs of development finance in a multilateral fashion, right? So having worked in multilateral system for the past 30 years, I very much appreciate, because multilateral institutions do represent the broadest consensus in terms of what needs to be done in development. What are the priorities, right? From building a policy framework that is sustainable, brings the country into transparency, zero tolerance to corruption, because these will build trust, right? And then, of course, making sure that sufficient financing goes into the country. The sad reality is that if you add up, AIIB, New Development Bank, us, African Bank, the total financial investment we can make is a drop in a bucket in the needs of Africa, right? Therefore, we very much welcome Mr. Jin Liqun, the president of AIIB. Certainly, he was my boss when we were working in the Asian Development Bank together, and I certainly have learned a lot from him. And AIIB, even before its formal launch, had a lot of interaction with the World Bank, and I'm very happy to say that partnership, in terms of sharing our experiences in institutional formation, in sharing our successes or lessons learned, so on and so forth, I hope that had benefited the creation of AIIB and New Development Bank. Not to mention quite a number of senior staff from New Development Bank and AIIB came from the World Bank, came from other multilateral institutions, and we have done a lot of projects together. So let me just use one example to showcase the tremendous partnership we have done. So when the World Bank had to support, increased credit to micro, small, medium-sized enterprises. The way it is done is that AIIB provided $100 million loan, and then the World Bank used our IDA, which is highly concessional resources, to blend in the cost. So the total cost in interest savings over the life of the loan for the clients is 18 basis points. It may be a small number, it adds up, right? And certainly that's one of many things we have done together. So we certainly welcome the creation of new multilateral institutions, and we believe we play a big role in this. And the World Bank has been, if I may say, very generous in sharing our knowledge, sharing our policy, sharing our experiences with the new development institutions. And I call Mr. Jin, my elder, and Leslie, who is a good friend of mine, who is the CFO of New Development Bank. We are a small circle. And let me say again, the total resources of ODA, official development assistance, is so small compared with the needs of development, right? So there is no competition. It's only partnership and working together, and hopefully using our limited resources, not as a direct investment, but to build a investment climate so that billions and trillions of private investment will go to Africa and go to other developing countries. That's really our goal.
That is so indeed encouraging to hear that there is such a strong and trusting sense of collaboration across the institutions. But Jingdong, when talking with your colleagues earlier, two